love that setup on gold. I want to take that trade too, but let me go get my laptop from my car. You know what? I left my jacket inside. Is that Santa's? Oh my! Oh, not again! Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1TradingDF10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, guys, welcome back to another live stream. Sorry, let me get my screen shared here for you. And also, by the way, you just saw that that exciting new sponsorship that we have from DNA Funded. Definitely check them out, guys. I'm really excited to be sponsored again by a prop firm that, you know, I met the team there. I really like the team. I've worked actually with partners of the team for years with 8cap. So I'm excited to bring that back. People ask us all the time, you know, which funding program do you guys like? And I've looked into DNA funding, DNA Funded, and you know, DNA Markets, of course, has been around for a while. What I like about this is that it's got a backing of a brokerage itself, right? It's not. Here's my issue with the prop firm space that makes me very not comfortable with it. A lot of the prop firms that you guys may see or hear or learn about are just run by like some random influencer who has no business experience. And that to me is I'm not comfortable sharing that with my audience. The team at DNA Funded, the reason I like them more, and this is my number one criteria, because of course I have something to, you know, share here with this audience, with this, you know, I have a responsibility to do what I think is the most honest thing possible, which for me, the number one thing that I think is important in a good prop firm is a actual reliable business team model behind it. I don't really like the idea of prop firms that are like pseudo trader, you know, ex-trader influencers that now are just, you know, straight up prop firm CEOs or whatever. I like businesses that are straight up businesses. They don't claim to be traders. They don't claim to be big influencers, just straight up professionalism, teams of people behind it. That's the number one thing that I look for in a prop firm, is the team behind it. And what's cool is that from my perspective, I get the chance to actually like meet these people, call, you know, speak with them. So long story short, check out DNA Funded. If you are looking for funding, use that promo code A1TradingDF10 and links in the chat. And it should also be linked in the description down below for you to check out DNA Funded if you're interested. And yeah, very excited to have that that partnership or that sponsorship going up and live. So we have got a big day here, guys. With I just got some sound behind me now. Hey, I didn't do that, guys. That was put upon me. Oh, wait a second. It's my early birthday. That's awesome. James Chandler, thank you guys. Appreciate that. That's an awesome surprise. That actually completely threw me off. Tomorrow is my birthday. Yeah, thank you guys. I appreciate that. That's awesome. It actually really crept up on me this year because I've been so busy. With the house closing, you guys get that. And of course, we have our big once a year Black Friday stuff that goes on, which is a lot of work and busyness on our end. We have a lot of, you know, customers who are getting access to the EdgeFinder, and that brings a lot of work. So yeah, I appreciate it. Thank you guys. That's really nice of you. And everybody in the chat. Wow. Thank you guys. All the happy birthdays. I appreciate that. That's very kind. Let's let's hope that, we have many more birthday streams in the future. I'm thankful every day to be able to do this. It really is the thrill of a lifetime for me to be able to do this every day, to have a show, to have a community, to be a part of the trading space. And, I was thinking about something the other day, and I'm going to move past this because I know we got to get some charts going here. I was thinking about it. I was actually on a walk, and I was just thinking, like, genuinely, how much value can an influencer possibly bring to trading space? Because there's this internal thing where I'm like, trading, the difficulty is that a lot of people who get into trading, they lose a lot of money. So I was like, what can I do from like a humanitarian standpoint to actually add as much possible value to like make a big difference in the trading community? And I thought about it for a while on my walk. I was like, what can I do to actually make a difference to people out there who are getting into trading? And the honest truth that I thought about, the number one thing that I could do for the masses is to simply preach what I try and preach regularly on the channel, which is this stuff is really difficult. You're not going to make a quick buck trading. It's going to take a lot of effort. It can be very rewarding, but it takes a lot of time. It's taken me years to get to a point where trading is making a significant amount of my income, and I'm able to, make significant, I'm not making bajillions of dollars from the market every week or anything, but overall I make good money in the markets, but it has come at the cost of a lot of hard work. And if I can preach that message, I thought about that long and hard on my walk. I was like, you know what? That's the number one thing that I can actually do to improve, help, and add value to the trading community, is tell people that this stuff is difficult and it's going to take a lot of work. And then also offer ways for people to, hopefully avoid some of the mistakes that I made. That is honestly the best thing I can do in the trading space. And I genuinely mean that. I really think that that's important. With this platform, what can I do to actually enrich and help other people? And you might say, well, Nick, are you just some saint? And the answer is no. Like, honestly, that's also self-serving. I believe that if I help the trading community and offer my, my honest truth to help people in the direction of improving or at least not losing as much money in the markets, if I can do that in a self-serving way, right? Because I'm not just a saint, that helps me a lot because people start to follow my channel. They come back and they say, this guy's not lying to me. He's not showing me fake, riches and a lifestyle that's not real. He's telling me the truth. It serves me to tell the truth. It's also, by the way, it's the longevity of my role here as a content creator in the trading space. I can't lie about this stuff day in, day out. I tell the truth because it's the easiest thing to do. I think that it's exhausting to, there's a lot of people who grift in the trading space. They come in and then they leave, right? They come in, they make a bunch of money, they sell a prop firm thing, or they sell you a million things that have they're baseless claims with no track records, no verified results, and then they leave the trading space, right? So I don't want to be that. So anyways, I don't know how I got off this far on that tangent, but maybe it was the birthday thing, because I'm coming up on 28 years old. And, you get to a point where I've made some money in the world, but now I'm like, what can I really do in the world? That's kind of fun. Maybe that's the theme for my 30s. I'm not sure. Anyways, let's move on because we've got a lot of charts here and not a lot of time. We got about 5 minutes. We're going to get the NFP move, and I want to break this down here as quickly as I possibly can. So NFP is coming around the corner. We've got last numbers were really pretty rough, right? In terms of jobs added. The hurricane event that took place in the Southeast United States hurt the story here for the numbers reported in November representing October's NFP. By the way, this is going to drive me crazy. These dates need to show up a little bit better. So let's do that. There we go. Okay. So this time around, what are we forecasting? Well, I saw it yesterday. I think it's 225. 218,000 jobs are forecasted to be added to the U.S. economy. That would be a bit of a bounce back from, you're talking about a number that looks like around here. That's the forecast, right? So forecast this time around is a bounce back in jobs added, which would make sense. But the question is, are they going to beat, miss, or kind of hit those numbers exactly. Because here's the thing, if you guys want to know what's going to cause a big spike in NFP or in price for many charts, well, if you get a significant beat in jobs add, let's say we get 300K, right? If you get 300K in jobs added, what does that do to the markets? It does a whole lot. The stock market's the hardest to gauge here, in my opinion, but the dollar is the easiest. If you get a really solid jobs number added, likely the dollar goes higher. If you get a miss from expectations, what happens? Well, the dollar index probably drops. Now, from that, we can extrapolate what that would likely do to other charts as well. If you get a stronger dollar, it probably pushes gold lower. Stability in the jobs market is not necessarily a very bullish case for gold, right? Because gold kind of thrives off of a weaker dollar and economic uncertainty. So if you're a gold bull, you actually want, and I say that because I know a lot of people in the audience trade a lot of gold, right? So if we get a miss in NFP, that's what you probably want if you're a gold bull. Now, how do we actually trade this and which way is it going to go? We don't know. We do not know. And this is something that I think is really important to reiterate. We're just like everybody else. We're waiting for the numbers to see what they come out to be. We don't know what NFP is going to come out. You're going to see people in the comment section periodically, all over social media. You're going to see people saying, oh, gold's going to go up, gold's going to go down, right? Don't listen to that. That is noise. We do not know what the numbers are going to be. The better way to approach it, in my view, is that if you get a rock solid report, trade the aftermath. So let's say we're looking at DXY, right? And let's say that the dollar index gets a big bump on NFP. Well, I'd be looking for opportunities to join that move on a pullback in the coming hours or days. So that's the way I like to trade an NFP report, is don't necessarily try and trade the spike and get all fancy, right? You're going to lose to the algos. They have a million% faster machines and internet connections and data feeds that will get that data out before you. You're not going to be able to trade the spike and make a ton of money easily. I wish it was that easy. We'd all be sitting on the beach right now. It's difficult, right? To try and outpace Wall Street's machines that can instantly have the data in front of it, trade everything on algorithmic. You're not going to be able to trade this spike and make money long term. In my opinion, I think that that's really difficult to do. I've never seen somebody do that. The only people I know who are doing that are, Wall Street, and they have millions and millions of dollars invested into building the best machinery, the fastest computers. So we're not going to win on speed. What are we going to win on? Well, we're going to win on analysis. What does this actually mean? What could this entail for the coming weeks in the dollar? What about the stock market? I think the stock market wants to see numbers around expectations. They don't want to see too hot because that would push back the rate cut story. And they don't want to see too cool because that would bring up fears about how strong this economy really is, right? So the stock market, in my view, wants to see, if you're looking at SPY, if you're looking at, these charts, also let me go ahead and get my 4-chart view going. The stock market wants to see, in my opinion, numbers close to forecast. They don't want to see too far. They don't want to see not too hot, not too cold. Gold wants to see cool jobs data, right? Dollar index wants to see hot jobs data to go up. So we're going to see how all of that shapes up here, guys. We got about 30 seconds. And we're going to see if we get a follow-through candle, a whip candle back and forth. We do not know. Again, the numbers will give us a better idea as to whether or not this candle has the chance to follow through. But please be careful trading the spike. I know a lot of people do that. So, you're playing with fire. Be careful. Let's go to our breaking news. All right. Let's see what the jobs data brings us here this morning, guys. We've got the numbers any second now. All right, and the numbers should be dropping here momentarily. Looks like the dollar index just took out the lows. Gold slightly higher. I'm going to guess that that's, again, there's a lot of reported numbers coming out here. All right, so we got about expectations, 227K. So that's a decent jobs print. Unemployment rate did also go up. So this is going to be right off the bat, going to say it's kind of a mixed report. So you had unemployment rate, right? People out there trying to get jobs. slightly couldn't get as many jobs as expected. So 4.1 ticked up to 4.2% unemployment rate. At the same time, the number of jobs added, 218 was what we were forecasting for. We got 227. So slight beat on that front, slight miss on the unemployment rate. So a bit of a mixed picture on that front. But at the same time, we had average hourly earnings go up. This is arguably a good thing for the consumer base, right? People getting wages increased. The only thing you have to be careful about is that there's a story here, right? With the whole Donald Trump deportation story, right? If that happens, that's something else to think about that could be very inflationary. The reason I bring that up is because if wage growth is going up now, imagine when you potentially remove a lot of people's jobs who are, often worked by immigrants. If you remove them from the picture, those jobs have to get filled by Americans or by people, right? So the labor supply shortage could be inflationary too. So it's something to think about. I do think that one of the big themes for 2025 is going to be watch that inflation number real quick. You got tariff concerns that could be inflationary, and you've got actually the immigration stuff, the deportation stuff, that if that does become a big story of next year, could actually be a bit of an inflation problem. As you remove people who work some of those jobs, people have to fill those jobs, and then the supply demand of labor can actually be inflationary. So anyways, what do we have here? So we have overall a slight upbeat number on the number of jobs added and a slight miss on unemployment rate and a slight uptick in this. Oh, and they also revised the previous jobs number up. So jobs data overall, pretty decent. 4.2% compared to 4.1. Yeah, it's a slight tick up. It's not the end of the world, but this revision here brings that 12 down. We just tripled last month's numbers at 12K, tripled it up to 36K, and 227 compared to 218. Wage growth is still intact. I think the stock market's going to find a way to rally on everything right now, but that's arguably a pretty decent story for stocks. You've got jobs coming in pretty good, right? So jobs coming in pretty good. You've got unemployment rate still historically very low, and then people are getting wage increases. Dollar index is down, which is interesting because, of course, that unemployment rate did tick higher, but I don't see a massive downside move on the dollar index at this time. If we take a look at the 1-hour chart, it is a move lower here, but that's not a ginormous move. Big NFP numbers can cause that kind of move. So this is a move. We'll see if it continues to the downside, but wage growth up, unemployment rate, you're a little bit of a mixed story for the dollar index, but it seems the market is taking a little bit more negative. Stocks wise, again, stocks are going to celebrate this idea of possible rate cuts coming into the picture. You take a look at the 10-year yield, which is trading lower. This tells you the bond market thinks that this is going to mean rate cuts are coming in December. So that was sort of up for grabs. There was a little bit of a 50-50 concept. Now looks like probably it's going to jump up. Yeah, 72%. So slight increase in probabilities for a rate cut in the month of December. We've got the December 18th meeting coming up where the Fed is largely expected to cut one more time. But then the bigger question becomes, once you start going out to next year, are we going to get, a lot more rate cuts or not so many? And with this jobs number, I still kind of think you lean towards, okay, look, jobs data is relatively strong in the US. All things considered, Bitcoin's bouncing back here a little bit, came off of its 103,000, went all the way down. Did you guys see that spike down to 92,250 yesterday? That was crazy. S&P 500, again, bouncing off of this a little bit, coming off of its lows here this morning. NASDAQ slightly higher here, up 0.25%. These are not huge moves, guys, but they are sort of acceptable moves, I would say, in terms of a reaction to this number. These were decent jobs numbers. They weren't bad. They're not exceptional, but they are certainly, you're going to get a nice uptick in jobs data. So we'll take it. So they're revising this previous number higher. That's kind of a big part of it. That's 24,000 jobs added to the previous number. And I listened to something. Did you guys hear Jerome Powell was talking about he got a little heat on the what was that guy's what's his name? The CNBC guy that interviewed him. Said they asked about the jobs discrepancy. Like, how is it that jobs data comes in and then they revise it? What's the story there? And Jerome Powell actually clarified a little bit to that's a heavy criticism. The reason there's a lot of revisions, maybe this process needs to change. I'm not sure. I don't make the rules, but apparently a lot of the jobs data is survey responses rather than straight up, hardcore payroll stuff. And so survey responses are inevitably going to have a little bit of data. Like if you ask people stuff, here's the thing. The reason I like the some economic indicators more than others is the PMIs, for example. I do like them, but here's the criticism of the PMIs. These are surveys, right? People's responses in surveys are sometimes and even oftentimes different from what they actually do, right? So the NFP report, right, jobs numbers that come in, the surveyed response components can sometimes not marry up perfectly with the actualities of what people are doing, how they're behaving, et cetera. So that's why there's a little bit of a discrepancy, why there's some revisions in there. But just thought that was an interesting comment in the recent speech done by Powell. So anyways, gold here up about 0.25% on the day. No huge follow through there one way or the other. Gold's still really stuck in this 4-hour chart range. You got silver here slightly lower on the day. Copper's up 1.2%. Oil, I wouldn't be surprised if there's a little bit of a bounce in oil off the response of this. With better jobs data, again, that could hint at the idea of, okay, oil demand is still going to remain intact. Let's see what the dollar's doing now. Yeah, dollar down 0.2% here this morning. Euro's up, pound is up, Kiwi up as well. So everything kind of having a little bit of a take back on the dollar here this morning. Dollar Swiss lower. Pound, euro yen, pound yen, even the yen cross is getting moving. Euro yen, dollar yen, slightly lower off of this. And again, as I mentioned earlier, yields coming down a little bit off of this in anticipation that the Fed may choose to cut rates going forward in that upcoming meeting. The Russell seems to like this. Up 0.9%. The Russell took a tumble yesterday, but we'll see where this one kind of lands. Here's some current setups that I'm looking at in the market. Let's go ahead and take out neutral readings, and this is what I've got. So I'm still bullish on, this is pretty much my watch list currently. Look at that, dollar yen coming in bearish now. Actually going to watch that close. Current setups for me are looking at possible sell setups on some yen crosses. And then at the same time, looking at the Nikkei, the Dow Jones, the NASDAQ, copper, and Bitcoin all on the bullish side, at least for short-term trades. So I like the story here. I'm going to look at some of these charts here really quickly. We'll do some watch list stuff. Following those jobs numbers, let's take a look, first of all, at some of the indices. So the NASDAQ, again, pumping higher here. Not really too interested at these current levels, but if you do get some pullbacks, I may be interested in possibly buying some interesting setups there with a stop loss, of course. Dow Jones up and away. Russell still continuing to overall move higher. Had a little bit of a sell-off here recently. I was keeping an eye on that. I liked this idea of a bigger pullback into this region for possible continuation plays. So watching the Russell, watching the indices as a whole. The Nikkei also not loving this chart, but would like to see a break one way or the other. So watching the Nikkei on that front. Let's see what else we have. I'm long the Chinese stock market, which has actually come back from the dead, it looks like a little bit here. Let's see, MCHI. Actually, you're not going to be able to see that position there because I have a covered call on it, but we can pull it up on the brokerage account really quick. Give me 1 second. Let's see how our MCHI is doing. I mean, it's in the green now. Let's see. But this, yeah, so we're slightly in the green now on the MCHI position. I also sold calls on that one, so we'll see how that plays out. But yeah, nice little pop on Chinese stocks. I am long on Chinese stocks. It's been kind of a boring one to watch, but it's a small position for me. And then Bitcoin. I already have a position on Bitcoin, and it was a weird one yesterday. So we had this huge dip, flew back. So this is going to be kind of confusing to explain. I'm still long IBIT. I'm in a drawdown here of $690 at this time. I'm still in the trade, even though the price went past my stop loss, because I trade an ETF variation of Bitcoin. This is kind of confusing, but because the market closes, it's not a 24/7 market like regular spot Bitcoin, right? The reason that I'm still in the trade is because this weird gap, movement happened like after the closing bell on, past New York session. So I'm actually still in the trade, which is a bit weird. That's part of the thing about ETFs, right? With ETFs, when you trade them, there's gaps. So what happened is that this moved down. You can see it didn't hit my stop loss technically on the open market. It hit it during overnight trading. So it's kind of a weird variation or component to trading ETFs. Sometimes it really helps me and sometimes it really hurts me. In this case, it helped me, but there was a time on QQQ I was long, market gapped way lower than my stop, took me out for a big loss. It sucked, but you give some and you give some back. That's the thing about trading ETFs. People ask me, well, why don't you just trade futures? And the reason I like trading ETFs is because I can oftentimes do things with options that I can't do as easily in other places. I know you can trade futures options, but I've always traded ETFs. I like the way the share concept works really well for me. It makes a lot of sense. I can manage risk very well with them. So the downside though is that gaps can be a little bit annoying. But in this case, it might have saved me. So if the market comes back for Bitcoin, I'll still be in the trade. So anyways, we'll talk about Bitcoin more in a second. Or actually, let's just take a look at spot Bitcoin price. So big blip to the downside, and came right back within the hour. But what I'm looking for here on Bitcoin would be speedy continuation. I need to get out of this trade in a hurry if this trade does not work out. Now, granted, I'm sitting on a lot of cash in my account. I don't have a ton of positions. I mentioned I trade on a stock brokerage, so I have a lot of sidelined percentage-wise cash on the sidelines. So I'm looking for opportunities to deploy that in other areas. But right now, I do like the Bitcoin trade. I like the momentum. This pullback that happened yesterday has to be a pullback for me very quickly, or I got to get out of the trade, right? Because you're talking about, Bitcoin's at a very high price, and I'm not an investor in Bitcoin. I am a trader. So what I'm looking for here is a quick continuation of this move. And if that does not happen, if I can't get my trailing stop going pretty quick, then I will very quickly cut the loss and move on to something else. But Bitcoin is on the watch list for me. We'll see what happens. Let's take a look, an updated view in terms of what's happening. So stock market slightly higher here today. Gold, not a, kind of a weird, and see, this is when we talk about trading spikes on news events. This is why I heavily discourage that. This happens when you get mixed data. And, traders who are not very accustomed to understanding like fundamentals, which again, like I said, I would say that the jobs print this morning was a bit mixed. We discussed that earlier. We said, okay, wage growth was good. Jobs added were good, but then you had an uptick in unemployment rate, which takes a little bit of the excitement out of the story. So you get this mixed response. And then the market very quickly, the algos look at all that and they say, oh, that's mixed, buy it and sell it at the same time, basically, right? So they buy it immediately up and then they sell it immediately down. So if you're the average retail trader trading off MetaTrader and you think you're going to be able to trade that spike perfectly, it's a challenging way to trade, in my opinion. For me, what I'm looking for is a more clear and decisive setup. The market has to kind of give me a really good reason for an entry. And then I'm trading, I'm not trading the 1 minute chart, right? I'm trading the daily, I'm trading the 4-hour chart. I'm trading slow and steady, right? Just trying to play with that. You're trading with some, you're trading up against some real difficult opponents in the algorithmic second by second, charts. Not to mention your broker will widen your spreads significantly right around NFP to protect their own risk management, right? They don't want to, a lot of times, especially brokers that are market makers, if they have to take the other side of your trades, they're not going to just give you perfect fill pricing, because then they're going to take a massive risk themselves. So I always discourage that. I think it's really, really close to just straight up gambling, because you can't possibly act fast enough reacting to the data compared to algorithms that are just, they instantly know what to do with the price. Your brain can't possibly function that fast. It's just literally, it's like trying to do calculations faster than a supercomputer. So anyways, just be careful with that stuff. We'll see where gold kind of rests at the end of the day. Bitcoin's up 2% here today, bringing me back almost to break even on that trade. My entry timing ended up being awful, like the worst entry timing, right? I entered right here and then so, I often kind of say, though, that I think entries are a little bit overrated. A lot of people just obsess over entries and they don't obsess over other things like risk management, exit strategies, which I think are far more important. Anyways, just also want to mention, by the way, guys, that if you saw me using the EdgeFinder a moment ago and you were like, what is that? The EdgeFinder is our premium market trading software. It helps you look at a ton of market data. Later on today, I'll be looking at the commitment of traders data, which allows me to look at what institutional money is buying and selling on a weekly basis. We also just added COT data history, which allows you to look at the historical positioning of institutional money, not speculating, not guessing what smart money is doing on a candle, none of that, right? We are actually looking at straight up what the CFTC's reported in terms of what institutional holdings look like. Are they long gold? Are they short the dollar? Are they long the euro, right? We can look at that through the lens of actual market data, not guessing what institutional money is doing based on a fancy pattern of a candlestick. I think that distinction is really important to make, because a lot of people get enthralled by the idea of trying to understand what institutional money is doing based on candlestick patterns, when that's a total guesswork compared to just straight up objectively what is reported by institutional money's positioning. That's why I like the CFTC's commitment of traders report. It's a great thing to have in front of you, and we've built tools to make it easy to digest and look at on a weekly basis. If you don't have a copy of the EdgeFinder, pick it up. Today is the last call, the last chance to get 40% off. And if you send us a direct message right now, we'll give you an extra 45% off as a last call opportunity to pick up a copy of the EdgeFinder. Do not miss it. It's our premium market trading software. We have thousands of people all over the planet using it, and we have a 10-person team behind the scenes behind this software and what we do, which is build powerful tools for fundamentalists and traders who are looking for sentiment data, etc. So don't miss it. There's your last chance. Pick up a copy of the EdgeFinder, 45% off if you send us a message right now. Okay, stay tuned, guys. We are going to be right back after this. We're going to be bringing in Kenzo for Fundamental Fridays to give us a bit of a reaction to this NFP report. Let's talk jobs numbers just after this. All right, and we are back with Kenzo from Extra Hot Forex. Hey, Kenzo, how you doing, man?
I'm doing great. Thanks, and you, man?
Doing well. It's good to have you back on, especially on a really important day like today. We just had the jobs numbers print, and I was curious your reaction to these numbers. We had, of course, the number of jobs added, 227,000, 4.2% unemployment rate. Average hourly earnings were slightly higher than expected at 0.4%. What are your thoughts on all this?
Not really nice because it's just mixed numbers. So which means you're not going to get proper or clear movements. At the end of the day, the market will just range. So which means at the end of the day, you have to fall back to your technical analysis. So at the moment, I was just watching gold, US 30 and NASDAQ. But since the numbers were mixed, I will have to wait for the market to open and see what will happen. Most likely, the market will just continue with the previous moves that we had on the screens or on your analysis. So it means it's just clearing each other. So actually, they just cancel each other's moves. So mostly you can't get any spike, or you'll just get only wider spreads during those times, but not really a nice one. But most of the time it's just like this. So we used to this.
Yeah, no, and again, not a clear good or bad jobs print. I would say pretty mixed is a fair conclusion. However, we do see yields dropping not a ton, by a little bit here, though, which might suggest that the December meeting, we are going to see a 25 basis point cut. Of course, that December 18th meeting is coming up fast. What do you think, Kenzo? Do you think we see a Fed cut in December? And maybe beyond just that question, do you think in 2025 we're going to get a lot of rate cuts, some rate cuts, or no rate cuts? What do you think?
Yeah, I think I was, for this year, I was still expecting that 25 basis points, even though it seems like inflation is slowly edging higher. But next year we have Trump, and I think Trump will actually need lower rates. So yeah, it's going to be difficult because it can't control that. So I think we can say we will be data dependent, like Fed or Federal Reserve. So I can't say much. I think we will see what will happen on CPIs, NFPs, and stuff like that. But I was hoping for rate cuts going further.
Sure. Yeah, no, and I think that when you look at the Fed Watch tool here, we can go take a look at the 18th of December, and you can see that it bumped up actually quite a bit here to 89% probability, at least according to Fed Funds futures. That's the way this tool calculates it. Basically, is it looks at the futures trading activity of bond market stuff, and it gives us a calculated probability. So 89.3% chance that we do see a 25 basis point cut. The question I think then becomes, you look at December, what's the chance that we cut in December? It's interesting. They're actually kind of forecasting that we hold rates, but if between now and then you get a really weak another jobs report or something like that, PMIs come in weak, or this could actually change to go further. But it's hard for me, Kenzo, right now to really have any sort of bearish outlook on this market. You're talking about a Fed that has a really strong economy right now. We heard the word used by Jerome Powell in his recent commentary was that the US economy is quote unquote exceptional, right? So you have exceptional from the Federal Reserve chairman. That's pretty intense. So they are surprised, even at the Fed level, at the outperformance of the US economy. The strength of the economy seems to be surprising everyone. And so when we look at that and we say, okay, so the Fed has a strong economy and we're still not necessarily high on interest rates, but higher than we have been recently. The Fed has room to cut rates if they need to. Businesses are doing well. The consumer seems to be doing okay. The difficulty for me in this is it's really hard to find any bearish case at this moment. And maybe that's not a bad thing. Maybe it just means you stay convicted long until further notice. What would, and this is where my question comes in, what would get you to change your view on the indices? I know both of us are pretty bullish on the indices. It's not a big bearish case that we can see right now. In 2025, let's say, what are you going to look for on the fundamental side that would change your outlook on the indices, maybe make you more neutral or even bearish?
I think at the moment, the market was just happy because of Trump. Let's say, as we always repeat, it's pro-business. But I think sometimes the market overdoes that, and the market is just fly and non-stop. I think one way or another, we will still get that a reversal here and there. But when the economy is doing good, obviously, even the indices will actually perform very well. they might not really perform as the way we see Nasdaq now, but I think slowly we can get those uptrends going further. But what I know is it's just not going to be as easy as we think. Now things are looking good, which is actually nice, but we will get some reversals along the way. We will get some reversals, but I don't really see it. Even if we have those reversals, I don't really see that as a very long bearish trends and stuff like that. I think companies are performing very well. Slowly, the rates will go down, even if maybe they will pause along the way, but it's way much better than 6 months ago. So actually, the environment is good for business. And yeah, I think we will see some nice push to the upside.
Yeah, I mean, that's the thing is it's just hard to fight what is a very strong bull market at this time that has some pretty good bases. You know, is the market expensive? Yes. It's hard to deny that the market itself is considered expensive on a PE ratio basis. You know, it is, and a sentiment basis, right? Everybody is bullish. Everybody is feeling strong about the market right now. The Fed, if the Fed itself seems to be pretty strong on the economy and pretty optimistic about it. So the thing is, what do you do in that scenario? Because I already know a lot of listeners are probably like, well, that makes me nervous, because if everybody's bullish, what happens if it changes? What happens if something breaks? And the answer is, for me at least, and I'd love to get your thoughts as well, is, you know, you can't time when something's going to sour very easily in the stock market. It's kind of one of those things. Market has a good outlook. You stay with it, but then you prepare. You be aware of what could change that story. For me, what could change that story would be a strong uptick in inflation. If we take a look at, for example, let's pull up just inflation data for a moment. Inflation data in the US has been trending down and then sideways, trending down. And now we've had at least one bump up in inflation. If we see that become a trend where we bump up, you know, some of the criticisms or uncertainties about Donald Trump is that some of his policies could be inflationary. And, you know, even if you like or dislike him, it doesn't, you know, if we're here to make money, the idea is simply this concept of, if tariffs do cause inflation, if deportations in the United States start to really ramp up, and that leaves a hole in the labor market supply, which could be inflationary as well, there are these concerns. The thing is, in actual terms, I don't make a move off of these things just because I feel like they might do something, right? I have to wait for them to actually start doing something to really change my opinion. Would you agree? Or do you think being more preemptive is better?
No, I think, I actually agree with you. Sometimes, actually, we just have to let whatever that it's about to happen, because as we do this every day, as you do your analysis every day, as you follow the news, obviously you will see the changes happening. It's not like maybe you're just going to be caught along the way. So with the tariffs with Trump, I don't think he will implement everything at once. Some of the things, I think maybe they will correct him, I think. But I think that it's actually an approach to say that people have to, or businesses have to invest in the USA, not really like 100% tariffs. If it's like that, I think it's also not going to be good for the US within his period, actually. So I don't think maybe he will allow that. But I think the best way is to just follow whatever that you see on the market. As you follow the market structure, you have the strategy. I think that is going to be way more important, and understanding fundamental that can also help, because next month, which is January, those first month, January, Feb, I think it's going to be tricky for the market also. I think it's going to be entertaining to see what investors expect, because every statement from from that is going to be very important, and it's going to have a direct impact on the market. So yeah, we just have to wait and see.
Yeah, and I think that again, for me, as you mentioned, you know, we're staring at this stuff every day. We're looking at it. We're trying to make an opinion about it. What becomes difficult is you can hear these things, right? Oh, Donald Trump is going to do this, and that could be very inflationary, or Donald Trump is going to do this. The Republicans want to do this. The Fed wants to do this. The thing is, for me as a trader, I'm really only interested in what's actually sort of materially happening right now. Now, as an investor, you might think differently. As an investor, if you are just long term looking to buy things and hold things, you might think a little differently than getting caught up in the short term. But short term right now, I still think that it's all about the Fed. It's all about, business earnings. And really, even when Donald Trump takes office, there will be a delay between when he takes office and these policies potentially even get put into place. So there's, you're talking about like 6 months away, really. I mean, so there's, as a trader, it's a different perspective than an investor. Right now, I think we can kind of wait on those things and not get overly fixated on them, and don't make a whole bunch of gut decisions just because you heard something on the news that spooked you or something. Right now, let's keep an eye on what is making the most sense, which is economic data, right? Let's watch the jobs. We just had a jobs print that was a bit mixed. Dollar index slightly lower here today, but most markets not making big moves in either direction, just because, again, kind of a mixed result. But we can continue to look forward to things like the Fed meeting, the inflation report that comes out soon, the CPI, et cetera, and just trading those as short-term catalysts until you do get something that's more meaningful from potential fiscal policy changes next year.
Exactly. So yeah, I think, it's going to be a tough year, but also interesting for us actually as traders. But I don't think it's gonna be nice for everyone. So I also see that when you have tools like EdgeFinder, it's something that can also help for those who don't really follow or understand fundamentals deeper, because you get to see where are the buyers, where are the sellers, whatever that is happening there is just going to be in your face. But unfortunately, people, they don't really see that, because the more the new administration or the new president, there are so many changes coming on the market, and whatever that you have now, it might not really work the way you thought it will work, or maybe you just need to modify one or two things. But it's way much better when you have greater tools at your side. When you modify or when you change anything, you can see where the market is going, where the database says, oh, money is going here, gold is going this, 1, 2, 3. I think that can also be a very good thing. That's why I think it's also a good thing to recommend that, because without that, sometimes coming years is going to be quite difficult for everyone just to make easy money.
Yep, absolutely. Very, very true. And good stuff, Kenzo. I just want to also, before we let Kenzo go, just wanted to mention to everybody who is watching right now, if you guys could take 2 seconds to make sure to go subscribe to Kenzo. He has his own YouTube channel where he's sharing free value to his community each and every day. So make sure, if you have not already subscribed to Kenzo on YouTube, it's at Extra Hot Forex. You can search up his name, Kenzo Extra Hot Forex, and you can find him there and keep up to date with his free analysis and free commentary that he shares on YouTube each and every day. Kenzo, thank you very much for coming on this Friday and sharing your thoughts on the jobs report.
Thank you very much, man, and also your viewers.
All right, have a good weekend. All right, guys, so we're going to move on here just for a few minutes, just take an updated look at the market. So we had, a mixed report from the NFP numbers. As I mentioned earlier, we walked through this, but long story short, you had average hourly earnings were slightly better than expected. Employment data, the numbers of jobs added were strong. About what was expected, but still decently strong. And then you had the miss in unemployment rate, which ticked higher. So a mixed jobs report, I think that sort of creates a mixed response and price action for most markets. You can see gold, very mixed, right? You take a look at the dollar index, pretty mixed there as well, right? Big down move, now kind of back to equilibrium, if you will, or midpoint. The euro, same story, up then down. So you've got a bit of a mixed response there across many different markets. Stock market, slightly higher here today, but nothing huge. I mean, you take a look at an hourly chart. We're just kind of trading sideways here the last few days. And in the broad scheme of things, yes, the stock market is up and away here recently. I've mentioned that I'm a little bit cautious about getting too overly bullish at these levels, but that pullbacks, in a broader theme could be an interesting play into the end of the year, into 2025. So that's something I'm looking at personally. I specifically like the NASDAQ, but I have a lot of, I'm very sidelined right now, meaning I don't have a lot of positions. I have a lot of dry powder waiting for some possible opportunities. So keep an eye. Bitcoin, I currently have a trade on. NASDAQ, like I said, looking for pullbacks. Copper is an interesting one, but would like to see copper make a bigger breakout move here. So I'm watching copper for a possible, bullish idea if we were to see something like this. But copper's on the watch list, at least for now. Let's look at dollar yen. I mentioned the yen crosses earlier. So dollar yen is officially currently getting a bearish reading for me. So if I can get something like a break and retest here, actually looks pretty interesting. Or if we do get a retest up into this region, also could be interesting. So a couple setups for me right now, still just on the sidelines for a couple things. Did end up getting the Bitcoin longs yesterday, and we'll see if that actually ends up playing out right or not. But I've got a stop loss in that trade if it doesn't. And like I said, I'm sitting pretty cash heavy. I do also have a long position in the Hang Seng index, the Chinese stock market. So we'll see if that can get anything going on that front as well. VIX down 3.5% following this. Makes sense because, again, the VIX typically trades down after big events if there was not a ginormous move, right? So a lot of people who bought calls or puts on the NFP report, a lot of those things probably expired worthless simply because, or will likely expire worthless simply because the NFP report didn't really move the market very much. So if you bought, think about this, if you're somebody who bought calls on the S&P 500 today, even though, yes, the stock market's up a little bit, if you bought calls way up here thinking the stock market was going to have a massive move higher, those calls, even though the market moved up a little bit, it didn't move up a lot. So those calls are kind of losing some value right now. It's part of the reason why I personally love to sell options, and I'm not a big fan of buying them, simply because you're working against time as an options buyer, and time is on your side if you're an options seller. Anyways, what we're going to do here, guys, take also look at this. Oil is back down to 67.75. I'm really curious to see what happens. If this does take out the lows, I'm curious to see what happens there. I mean, oil prices are looking a little bit rocky here at current levels of support. This will be the 1, 2, 3, 4, 5, 5th major time on the daily chart that we retest this area. Makes you a little bit wonder. It makes you wonder if this is going to be the one, if we're going to continue this downtrend theme that we've seen on oil prices or not. I do like the idea of finding some oil opportunities on the long side, but would need to see price to start forming and some sort of real catalyst come into the picture. I'm just not seeing that right now. So for now, price action's looking pretty rough. So yeah. By the way, guys, I mentioned it earlier, but this is your last call. Cyber Monday deal is ending on the EdgeFinder. Everything is currently 40% off. But if you are watching with us live right now, this is your last chance. Send us a direct message using the link being dropped in the chat. If you send us a message, we'll give you 45% off on the last day here, Cyber Monday week. NFP report day. We extended the sale through the end of the week here for people who needed a little extra time. Don't miss your chance. If you've wanted a copy for a while, there it is, 45% discount right now. Click the link being dropped in the chat, and you can send us a DM on our website. We'll speak directly with you. Have a real person on the line that can answer your message and give you some information about the discount that we're running. So there you go. All right, guys, we're going to take just a quick break, and then we're going to turn the show over to Forex James, one of our most popular show hosts nowadays. Everybody seems to love James. We get a lot of positive comments on his analysis and approach. So stay tuned. James is taking over the show just after this.
Hello. How is everyone doing? Hope you're all having a good end to the week. I really hope there's no blown accounts after the dollar move today. It was quite aggressive, move to the downside. Although NFP seems to be quite supportive, obviously the wages as well. So it's bouncing around in terms of sentiment. I would say it's quite mixed. So I'm sitting on the same side as I think Nick said he viewed it as quite mixed as well. So Euro is actually moving down off of this news. We had an initial spike, so obviously counter to the dollar. As we saw a weaker dollar, we saw a stronger euro. Same thing here with the British pound. Now we're seeing a reversal of that, which is perfect for me. So I can't show you fully because my MetaTrader has decided not to work, but you can see generally what's going on here. I promise it is real. It's just frozen. So there's that. I'm also in Euro Yen, which is very similar. So this isn't the real trade positioning, but because I've DCA'd, this is my average price, which is why it's marked up here. There is no stop loss. But yeah, you can see my take profit is just around this level here where my alert is set at 15572. So I'm still very confident in saying euro dollar still has a lot of room to go to the downside. So I'm just holding on to this one, really scaled in again right after we had the news release on the spike. Obviously took another short position, so quite happy to hold this one really as long as it needs. I'd ideally love to get out ASAP just so I can flatten the portfolio a little bit before Christmas, but if I have to hold it, I will. Watchmen, it's a slow Friday as usual. I don't know what charts you're watching, but it's been pretty volatile for me. I mean, it's been obviously slow leading into the news, but a lot of movement very quickly then. Liban, hello. Wonga, hello. Gold, yeah, I've not looked at gold yet, actually. Let's see what's happened. Still inside its range, actually. Obviously quite an aggressive move down on the H1, but if we're looking at the broader landscape for gold on sort of the H4, there is nothing here. It's still sideways moving. So there is still nothing to do on gold, in my opinion. You know, I've said it for the past couple of days, but there's no catalyst to buy. There's no escalations in sort of the world tensions, and there's again no reason to sell really. So I'm sat on the sidelines on gold. Probably won't really touch that for the next 1 to 2 months, obviously, unless we do get that catalyst, which I kind of hope we don't, because also that's not good for humanitarian purposes. Johnny, hello. Cedric, hello. Non-scripted. The dollar went down. So what we had was, let me pull up the news here. Let me scroll over here. So we had NFP come out positive. So this was 227K. Previous was 12K. I think this was revised actually to 34, I think. Consensus and forecast was beaten. So pretty good performance in NFP. The issue is unemployment ticked up, which isn't good. So it's kind of, again, mixed, as I said earlier, which leads people to start pricing in even more than it already was, a 25 basis point cut later this month. So if we actually, let me just change this there. If we have a look at the CME FedWatch tool, so this will tell us what the probabilities are. So yeah, you can see it's increased massively. So previously, or yesterday, it was a 29% probability of a rate hold. It's now decreased to 12%, and the rate cut probability is increased to 87.3%. So that's why the dollar's down on mixed data, because it's not necessarily great if we're looking at it in terms of Fed decisions. Yeah, Wonga, exactly. it'll be people repositioning now to account for a rate cut. It's basically already priced in. I think there's that small sort of 20% probability that sort of wasn't priced in, but I guess now that is going to happen. Although having said that, I'm quite happy to say that I'm bullish on the dollar. I'm still looking really to retarget this 107. And then after this, I'm looking at the 110. Now, I may be a little bit biased here. Maybe I could be completely wrong, which, maybe I am. But yeah, for now, the way I see it, there is nothing really to stop the dollar heading there other than a rate cut. But again, the rate cut's expected. It's not really a huge shock. Why is gold down? Because the dollar has reversed. Essentially, obviously, we had a downside move on the dollar, which is beneficial for gold. And now we've sort of reversed that whole move. So gold will also have corrected. With a rate cut, we should see gold go up again. No, not necessarily. So with rate cuts, it's not a case of it's not like NFP. So it's not a case of we get the rate decision on the day and then the market reacts, because obviously with a NFP or unemployment, we don't really know what the release is going to be. We have a guess, but we don't know at the end of the day. So it could come out as a massive shock. Whereas with rate decisions, it's generally very understood what's going to happen at least a couple of weeks before. So it's not quite the same. So if we actually do get the 25 basis point cut, I wouldn't expect us to have a huge bearish effect on the dollar. Pound CAD. I was actually stopped out of my Canadian dollar positions this morning. Closed pound CAD for about 0.9, about 0.9% loss. But you can see here, closed out around these highs here. And then I took a full loss on Euro CAD as well. So it's not been a great day. I also had to close one of my Euro dollar shorts as well for a loss, just to minimize risk and move my average price up. But yeah, I think this position is invalid now anyway. Oil's moved down. Actually, there was some news that came out. OPEC Plus delays oil output hike until April. It's extended its cuts into 2026. So that's actually quite supportive of oil. But yeah, I'm just not really a huge lover of the oil market right now. In terms of bullish or bearish, I don't really have either way. So yeah, I'm kind of staying out of this. The trend in terms of moving average is about to turn bullish. We've got an RSI overbought. Technicals are very range bound over here. So yeah, honestly, don't really have an opinion on this market anymore. If yen goes up, reverse carry trade will impact NASDAQ like August. No, Russ, that's not quite the same idea. So the reason we had such a big reaction in August was because it was essentially a panic sale. So what we had was a intervention by the yen. I'm fairly sure during that time we also had pretty bad news for the dollar. So it was a case of just sell your holdings in those assets such as S&P, the Nikkei, the NASDAQ, and that's what caused the sort of brief flash crash, is what I like to call it. But yeah, just because the yen's moving up, it doesn't necessarily mean the NASDAQ's going to start moving down. They're not correlated really like that. Dollar yen, dollar Swiss, euro yen. Yeah, I'll get to the charts in a second. I'm just catching up with the chat. Any arguments for bearish dollar? You could say that the data for the dollar hasn't been as supportive as it was. So during, let me go here. So during this move on the dollar, there was essentially no bad data. It was all very, very good, and it was very supportive of dollar longs. However, recently, since this move, it's been neutral relatively. So you could say that maybe the labor market isn't quite as hot as what we were expecting or what we may have thought it could be. And obviously we now could be are pricing in the final bits of a rate cut in this month. But again, overall, I do still stand bullish. Okay, so let's have a look at dollar yen. So for a long time, well, I say a long time, for the past sort of 1 to 2 weeks, I've had more of a bearish stance on dollar yen, but I've been very opposed to actually selling it because the dollar's been so strong, and I also expect a strong yen. And obviously, the point of trading, if we get down to the fundamental of what trading is, you buy strong, sell weak, and vice versa. And in my opinion, the dollar and the yen are both pretty strong. So it's not a market I would like to buy, and it's not one I would like to sell. Although, again, I do more stand towards the sell side of this market. So I would be looking possibly targets down here, sort of the previous support levels, maybe somewhere around here as well. We've got, there we go. We've got the EMAs have turned bearish, but yeah, I wouldn't. Yeah, again, it's not a market for me. But overall, I'm still bearish. Similar to Euro Yen as well, which I'm currently in the short positions here. I think Euro Yen is probably the best one in my opinion. The Euro is still very weak. There's not much really, in my opinion, that's supportive. We did have the French government, or the French, I think it's French Parliament actually. They got a vote of no confidence, and on the face value of that, it might sound very bearish for the Euro, but it's not really if you think about it, because let's say you've got a taxi driver that you're concerned about, and he's driving you down the road, you're a bit worried, you don't know what's going to happen. He gets out, so obviously the vote of no confidence, and a new driver gets in, and he's better, or you might think he's going to be better. So that's essentially the way it's working. So there's possible hope around the Euro, if that makes sense. I mean, it's not huge, but it's a factor. Hey James, for swing trades, is it better to start off the analysis from weekly time frame or start from daily? I would say start on the monthly and the weekly, and then work your way down. So key levels are a huge thing. So you might say, and I say that technicals really don't matter that much, but if you're buying into a huge weekly resistance, you're going to likely face some natural pullbacks. It may not be for a fundamental reason. It's just the way the markets move. If you're buying into these levels on monthly and weekly timeframes, you will, again, likely to see some sort of reaction off them. It's either expected or a pause, which would be good for the dollar. Yeah, a pause would be good for the dollar, but I highly doubt we're going to get a pause at this point. I was saying we'd get a pause, but I've had to sort of revise that idea now. You're shorting EJ with me. Good stuff. Let's make some money before Christmas. Hopefully I can pay off some Christmas presents. Run 32 miles, place the trade, just made Lambo money. Alan, I'm glad you ran 32. I'm glad you took my advice and didn't just run 30. Leaning towards EU parity. Yeah, Johnny, I am still thinking we're going to get parity on euro dollar. The thing is, I just don't want to hold anymore. So I've been, I've already said it on this stream, but I was saying yesterday as well, I don't want to go into the Christmas period or the Christmas holidays holding positions. Firstly, because it's possible we'll see end of year profit taking, which can be volatile. Obviously, it can throw markets either way. And we also just have less liquidity. I know it's more towards the actual holiday period. Obviously, we see the market movers and market participants start to obviously stop trading. We don't get that volume to actually move markets. And I don't want to sit through that, especially if I'm trying to relax, having my Christmas dinner. I was told the yen is like the dollar in the sense that it has that if it's strong, then it's strong across all the pairs. And if it's weak, yeah, little bear, that's true. So if we, yeah, I mean, oh, actually, yes, it's very simple. It's true. Yeah, EU parity next year. That's exactly what I'm thinking as well. But I'll reposition myself in euro shorts next year. Right now, my priority is getting out of this mess. I've been shorting this whole move here, and obviously it doesn't look like a big move, but obviously I'm shorting these on 30-minute timeframes, and this is the daily time frame, so it's quite heavy at the moment on my portfolio. So again, priority is just getting out of these positions with a profit. Bias in euro dollar is short, but obviously do your own research because we are very extended on euro dollar. Can you analyze corn? No, and it's not because I don't want to. It's because I don't know anything about corn at this moment. It's really not been on my radar. So I'll have a look at the price action if you want, but I can't really give you much more than that. I don't even know what the ticker is off the top of my head. It's ZC. That's it. We'll use futures because trading the agricultural commodities on futures is generally a bit more appropriate. See, the thing is, when you get to agricultural commodities, so corn, wheat, coffee, orange juice, those types of things, one of the biggest drivers is weather conditions and obviously the supply and demand. And I actually don't know what the weather conditions are at the moment. And so again, I can't really give you much. But in terms of just price action, just the way I trade from a technical setup, I'd be looking to short here. And the reason is we've got a very clear level of previous support, now turned resistance here. So I'd be looking for another sort of rejection off there back into these previous lows. But yeah, again, it's not a trade I'd take. It's just a basic technical overview. I was shorting GU for the past 30 days, finally glad to be out, but looking for more entries. Yeah, Johnny, good stuff. I'm sure you feel good about that one. I have one problem with Trader Nick. How do you draw SNR levels? Well, first of all, I'm not Nick, but it's very simple. Find a level. So it could be a low or a high. You draw a box. Does it line up with anything else? Here it does. So we've got previous support from this level. And that's essentially just draw boxes on your chart. If they line up with other previous parts of the market, then there you go. You've got SNR. It's probably just Google it, YouTube it. There's actually probably thousands, if not tens of thousands of videos on all that sort of stuff. Is it a good idea to trade the last week of December and January? Last week of December, no, because you've also got the new year. Again, low volatility period, markets are closed. So there's no point. What is more important for DXY movement, good economy or rate cuts? Not scripted, they go hand in hand. So the data you get, so labor market data, for example, inflation, and all the other things drive then what is the central bank going to do, and not just for DXY, it's for every other country as well, or every other central bank, I should say. So it's all important. It doesn't really matter which one's more important because it's all linked. Most of the banks and central banks around the world close at various times late December. This is a net effect on transactions occurring daily. This volumes. Yeah, exactly, Sean. Thanks for that. Russian guy. I have no idea what your name is, but I don't want to get this channel banned. I think that would be a bit of a poor image, so I won't do that. USD CAD. Here. Actually, let's see what oil is doing before we have a look more into the Canadian dollar, because I know oil was bullish on the EdgeFinder, and it's not now. It's disappeared. So yeah, this is why I've been on the edge of oil, because it's just not really giving me much to buy or sell. So in terms of the Canadian dollar as well, it reflects heavily. Not really too interested in the Canadian dollar, so I'd be more focused towards the US dollar. And again, if I'm looking towards a stronger US dollar into 2025, let's just see. So there is no opportunity to long here, but the next target really is these previous highs. So I think we're pretty smooth sailing, really, in terms of traffic on the left side, if you will. So we don't really have anything within this area to sort of stop price moving into this high. And of course, it depends heavily on what the economic indicators suggest later on. But again, just in terms of the price action, it seems very straightforward, really. I hate these SNR lines. Close your eyes and draw a line. if it'll hit many support and resistance. Fair enough. I draw SNR on higher time frames using the line chart, then refine them with candles. Yeah, I love line charts, actually. I used to have my currency indexes on line charts, but I got rid of them for today. So I might leave them as candlesticks, but anyway. What an ignorant juvenile request. Have I missed something? Was a message deleted or something? Or are you talking about the Russian guy? Anyway, so in terms of the dollar, let's go back and see. So we had, on this candle, we had unemployment, we've had an NFP, and we've had wages or earnings. So now, I'd be expecting potentially a smaller move to the downside as we price in Fed rate cuts, and then slow but sure move to the upside. But this is just best guess, so don't take this literally. Obviously, it's just a brush drawing. But yeah, we'll have to see what happens with the dollar. But I think 107, 110 are fine. There still seems to be quite a nice sentiment to the long side on the dollar with the bank reports as well, which is good. Any recommendations on currency indexes other than DXY? Well, whatever you're looking at. So if you're looking to trade the euro, look at the euro index. The pound, look at the pound index. Yen, you've got all of them. So I keep the dollar always. I keep the euro always. And generally, I'll keep the yen. So I normally swap out the pound index for another currency. So it might be New Zealand dollar, Canadian dollar, whatever else I'm trading at that time. But yeah, I wouldn't overthink it too much. They're an unfortunate occurrence in the live stream. Yeah, you'll always get people like that. But hey, it's no big deal. It's all good. I'm sure he was just joking. We don't need to go on a witch hunt for the poor Russian boy. Blake, you want to cover Bitcoin? We can have a look at Bitcoin. I'm not sure what price it's at now. I know it hit over 100K yesterday. Oh, we back down under 100K. Well, this is what I was saying. If anyone was in the yesterday's stream, I was talking about the possible profit taking at the 100K level, which seems to have happened. Like not major, but it does seem to have happened slightly. The thing is, the buyers seem to be quite resilient. Obviously, we had a push down, rejected very, very quickly. So now it wouldn't surprise me if we continue up, sort of retest this 100, and then continue up. I don't think really there's any bearish case for Bitcoin. It's a funny asset really, because the more time that goes by, the more bullish it becomes. Because obviously, the only thing I really do know about Bitcoin is the scarcity side. Obviously, the more time that goes, the more Bitcoin gets mined, the less there is to mine. So I think generally speaking, it should just continue to the upside. That wick is a nice target over the weekend. Yeah, I think Bitcoin and the majority of crypto is mainly just retail driven. Obviously, Bitcoin, it does have some institutional play, and some large players, obviously, but I think the majority of the movements are just retail driven. And I could be wrong. Again, I don't really know anything about Bitcoin. It's just an assumption. But yeah, I think that's why technical analysis plays out so well in the crypto markets, because if you are, I don't know, let's say Ethereum, for example, if you're looking at, I don't know, it could be a trend line or it could be a wedge, whatever it might be, and you've also got 100,000 other retail traders looking at the same thing, and doing the same thing, buying off a trend line, whatever it may be, you've got a much higher chance of that actually working out compared to the Forex markets. Anthony, I don't backtest. I think backtesting is a crucial thing for new traders to develop strategies and things. But once you've been trading the same way for such a long time, there's just no need to. It's the same thing with journaling. I don't journal. I just don't see the point. I've got, trade history, broker statements, my FX book, all that sort of stuff. It's enough of a journal for me. What do you think would happen if Bitcoin Creator would come back? I think it would be very bullish, I think, but it also depends who it is. If the conspiracies are right and Russia made it or something, then actually I think it might be a bearish situation. But I think generally it would be good, but obviously, again, it really depends who it is. If it's some nobody that no one's ever heard of, I think that would be an interesting thing. It would definitely help with the lore of Bitcoin. Bitcoin, ETH, and Solar all institutional bought now. Interesting. Anyway, it seems like the markets are very slow now after the news. Dollar seems to be just sort of range bound. Euro is having some slight downwards pressure, not too much. Yen is holding its ground. Pound is also heading to the downside along with the euro. Let's just see how these positions are doing. Euro dollar, okay. Euro yen's moving quite nicely, which is good. I'm still in my S&P position here. I'm really unhappy with this. So I've been quite vocal about it. Actually, I'm really proud of the trade. I think I caught it really well. But the position size I used was so small that the profit is essentially non-existent. It's basically enough to buy me a meal, which obviously, for some people is great, but for the account size I trade with and what I'm used to, it's just not really worth it. So I would love to see a pullback into this entry zone so I can get back in with proper risk and actually, make some money off it, which would be good. But we're in the end of year rally now, I think, so I may as well hold it and see what happens. 2025 could be absolutely mad for Bitcoin if we get US strategic reserve and some more corporate adoption. Yeah, to be honest, and again, this is just best guess from an uneducated non-crypto trader, it wouldn't be a shock to me if Bitcoin hits 200 to 300K within the next 2 years. And I think the milestones that Bitcoin reaches, so every milestone it reaches, the more buyers you're going to get, obviously. So at 50K, it's a big thing. Everyone's talking about it. It brings in more people. You got FOMO, people buy. Then it cools down at like 58K, for example. Then it hits 100K, the same thing happens. Then it'll hit 150K, same thing happens. It'll keep getting just pumped and pumped. And again, that's a very basic way of trying to explain that, but I hope you understand what I mean. Hey, yo all, how much year should I have to take to learn? I'm just a beginner, 15 years young, a big interest into this. Mezgu, if you're 15, you're way ahead of where I was at your age, so you're already on the right track. Give yourself the next 5 years, then you'll be 20, then you'll be old enough to have saved a little bit of money, and you'll also be old enough to actually open a trading account. Give yourself this 5-year buffer to just learn and absorb everything you can. But don't fall into the social media type of guys. The people that are showing you, I'm not going to say who it was, but there's someone on Twitter that says you can just trade from these wicks. And it's just the most ridiculous thing I've ever seen. So don't fall into those crazy technical things. Generally speaking, it doesn't work, especially from people that sell you a $200 course on Twitter. Opinion on trading market structure, of course, with fundamental sentiment. By the way, greatly appreciate all your insight and responses. I think there's layers to trading, really. So you've got, I'm just going to do fundamentals. So you've got, unemployment, you've got NFP, you've got inflation, all those types of things. And they're all sort of the main thing in my opinion, that you should pay attention to, because that is what's driving the markets. Like, this is what develops the sentiment within the larger traders that actually move markets for them to click buy or sell. And that's what creates trends for then you and me to capitalize on. Then from there, you've got sentiment, which is what I just discussed. Then from there, you've got technicals. So from the technicals is where we obviously get our entry. That's where you look at support, resistance, fibs, whatever it may be that you use on the charts to actually get in. So as long as you're using these first two, the technicals, in my opinion, again, are kind of irrelevant in the big picture, but obviously they are needed to make sure you're not buying into a stupid level or something. There is some bearish news short term around mining. Usual causes short term downtrend. Just saying for educational purposes only. Interesting. Okay. I've missed a lot of messages here. Hold on, I'm just trying to catch up. Okay, fine. Okay, cool. Seems like it was just Bitcoin talk that I have quite honestly no idea about, so that's fine. Yeah, markets again just not doing anything. I don't think we'll really see much for the rest of the day, to be honest. Maybe just some small range bound movements or possibly continuations, but I wouldn't expect anything too large, really. What I do like though is these markets are currently holding up very well at their current levels. So if we look at what the general technicals are telling us, now these are just Bollinger Bands, and it's a very basic way of sort of going about this, but we've got a break here on euro dollar. We had a full sort of break here, correction, and we've just been moving to sideways, and it's not had a full aggressive correction like we've seen here and in the past. Obviously, this is all fundamental driven, but just, talking point really. Euro pound, similar thing here. We've not managed to have a mean reversion. Dollar CAD, similar thing here. We've broken out and we're still continuing higher. Dollar NOK, again, a range bound movement, no mean reversion yet, which tells me that the fundamentals that are currently driving the moves that cause these markets to get to the current levels are still holding up quite well, which for me is very supportive of my euro dollar short position, which again, it's just a small tidbit, but interesting in my opinion. AU is moving hot. Let's have a look at Australian US dollar then. Oh, it is. It's moving aggressively. So as I was saying yesterday, I don't have much of a reason to go short on the Australian dollar. I mean, I'm definitely not a super bull, but I'm not really massively bearish either. So the only situation I'd be happy to take a short position on would be if we got the break and then the retest here, and it would just be a case of having to take profit at the next level of support, which is down here. But yeah, not a massive fan really of this market. Let's see what's euro yen doing. Yeah, Australian dollar seems to have really weakened actually off this news. CAD Swiss. I'm not in this trade, but I'm not sure why it's marked up. I must have been doing some analysis on it. Really hit hard on CAD Swiss, although a really nice support level through here. The only way I would consider taking this trade is if we saw supportive oil prices, and I'm not really sure we will. So to be honest, buying from this support right now seems a little bit of a risky move, although technically this looks really, really good. So I'm going to keep this marked up and we'll see what we get. There's a 90% rate cut. Why is the dollar not lower? Zorro is essentially priced in. It's no surprise that we're going to get a 25 basis point cut. is like me telling you I'm going to take £10 or $10 off you in 2 weeks' time. If I come and collect that $10, you're not going to be surprised because you expected it. It's the same thing with news. When it's, you know, when it's discussed and then the data also supports it, then people start expecting it, and that is what's going on now, or what has already happened. I think yen crosses bottomed out. Best to avoid them. Just a hunch. I think the opposite, to be honest, Marcus. I think we still have a lot of room to the upside on the yen. We've still got a rate hike coming by the Bank of Japan. So obviously we'll have to see what the situation is after that rate hike. But again, you know, I'm not saying the rate hike's unexpected, because it is very expected. But there's also still the possibility of an intervention by the MOF, which is a small supportive measure. But also you've got to look at the other currencies. So yes, you might not see a huge move on the yen to the upside, but what about the other currencies that the yen is against? So always a relative view. Cat Swiss broke my heart last week. Yeah. Could you please give a quick overview on copper? I'm bearish until clear recent lows. I'm actually bullish on copper. So this is our position on copper. Let me have a quick look. This wasn't my trade. It was one of my traders' positions that we sent out. So there's increasing industrial demand for green energy, electrification drive, structural demand. We've got metals with China, commodities metals with China increasing. General sentiment towards copper is bullish. So it's a very sort of brief explanation, but I'm not a copper guy, really, to be honest. Just reading out some bullet points for you. Sell the rumor, buy the news. Yeah. Seems gold NFP double move over. Now it seems they make move. Only interest to buy in some lower level. Let's see. Yeah, to be honest, yeah, there's really no point looking at gold if you're a scalper. Then it's probably fine to just buy support, sell resistance. But if you're looking for even day trades, swing trades are completely invalid, in my opinion, at the moment. There is no way to get into gold. No, I'm not trading dollar Swiss at the moment. The only things I'm in are the S&P, copper, euro dollar, and euro yen. Okay, so it seems like euro dollar is quite resilient, which is a little bit annoying. I think we're really due for a pullback here, to be honest, to the downside. The daily is very weak. The weekly candle is about to close without engulfing the previous one, respecting minor structure here. H4 moving average is kind of a resistance here. RSI was overbought. Yeah, I'm happy to remain short here. Pound dollar. Actually, yeah, let's see pound dollar, because I'm more on a sell side here. This was actually analysis from yesterday, which has held up really well so far. So yeah, actually the analysis hasn't changed. So we've had a very nice trend line here, but I don't think this trend line is enough to support really much going on here. I think the US dollar, again, has got a lot of potential to continue moving up. We've got the 200 daily moving average right here. We've just rejected this fib level, along with this previous market structure level here. The overall daily trend, in my opinion, is down. So it makes sense for me to start looking at this previous low as a possible target around here. I know these drawings are really crude, by the way, but hopefully you understand them. Last 5 years, major currencies hiking rates. Finally, they're considering cutting. Same time, BOG is considering hiking. Yeah, well, it's just the way of the wind. FinViz is very good. It shows what assets are performing the best and the least. I love it for currency pairs as it shows what's strong and weak. Better than that way. Yeah. Fair enough. Cool. I'm new to trading. I have a good career, but I'm burn out of it and would like to trade full time and work my career job part time. Where do I start trading? Any advice? That's quite a packed question, really. So if you want to take trading as a full-time job, you're facing a really big hurdle. The stats are against you. You need a lot of money to back you up. You need a lot of savings also just to be as a nest egg. So really you need to build from the ground up. First of all, you need to build up savings. Then you'd need to build up capital and savings if you can afford to do that. You'd also need to invest in some proper education. And you'd also obviously need to learn trading. So you'd really need about 5 to 10 years to do that. Obviously, assuming you're starting from scratch. Look at today's candle on GU. Yeah, this is today's candle. I do quite like the way that this is forming, actually. I'm not sure that the pound is something I want to sell, to be honest, although I do quite like this short setup. Don't you think euro dollar is bullish now? America has rates much higher than euro, are close to stopping rates. Doesn't matter. The rates is just surface level stuff. We've also got a lot of political uncertainty in Europe. Germany has been really weighing down the Eurozone data. The dollar is very stable. The dollar might drop, but it will always, well, for the foreseeable future, will be a very stable currency. It's very supported. So generally speaking, the dollar is always stronger than the euro. Obviously, we see pullbacks and stuff. I don't mean just sell and you'll always make money. That's not what I mean. I just mean generally speaking, obviously. Trading will burn you out even more if you were asking where to start. Yeah. James, leaving the live now. Hope you have a great day and your trades continue in favor. Johnny, you too, buddy. I hope you have a good one. Enjoy your weekend. USD CAD, James, pleased with the results of Canada this afternoon. Employment climbed to 50.5. Yeah, we already looked at the dollar Canadian. I don't really see anything stopping it from reaching the previous all-time highs or previous highs. I must have deleted my drawings. That's annoying. Yeah. Oh, wait, sorry. This is the H1. I was a bit confused there. There we go. That's what I was looking for. So these highs here are really the only target I can see. In terms of all of the noise and traffic here, there's nothing substantial to act as resistance for price. So as far as I see it, quite easily come up into this sort of 1.46 level, and then maybe we might start coming to the downside. But you should also pay attention to oil prices, and obviously what the Fed is going to do is very important. But yeah, from a technical aspect, I think this is completely fine. Canadian dollar seems very weak. Again, oil isn't very supportive for the Canadian dollar right now. Rajath, please don't use my GU analysis as a signal. If you've done your own research, then completely fine. But again, it's not my favorite trade, really. It's more just the technicals look nice and generally looks good to go short on the face value of it. Yabsra, there is nothing on gold. You guys have been asking all week about gold and it's just moved sideways. So I'm sorry, I don't mean to be rude, but I'm not even going to bother checking the chart. This does not make sense because the euro has been always stronger than the US dollar so far. Only past couple of years it has been close to parity. Let's see. Suppose you have got this period here where we did see the euro massively outperform the dollar. So this was from 2000. Sorry, this was from the year 2000 to 2008. Since 2008, the dollar has absolutely dominated the euro. Obviously, it's still an FX market. So when I say dominate, it's not a huge move. It's only a 40% move over the course of, since 2008 to current. But the overall movement of this market is still to the downside. The dollar generally does outperform the euro. Which site do you recommend for real-time Forex news? If you want a free site, then just use Financial Juice. It's free. I don't think you even need to sign up, and it's like a real-time news terminal. Euro is trash. The euro absolutely is trash. We agree on that one, Sean. Bearish momentum until next year. I would like to say so, but don't take my word for it yet. Vincent, we've covered dollar CAD like 5 minutes ago. I'm fairly sure you're the one that asked for it as well. Oh, right. Okay. I see what you mean by the dollar strong. Sorry, euro stronger than dollar. Yep. Too many divergent ideas and conflict in politics. The euro is a reflection of the state of all nations in Europe. Thus, the France, Germany, Spain, Italy are doing poor. Sean nailed it there. It's a doomed project here. Cool. Okay, good stuff. Okay, so I've got just over 15 minutes. If there's any chart requests, let me know. Please not gold and please not dollar CAD. Done those way too much already. Okay. So euro dollar slowly pumping its way down, which is what I like to see. If we can start closing the market tonight somewhere around here, so around 1.054, I will be a very happy boy into the weekend. If not, I'll be very unhappy, and I might start having to sell off things to pay for the margin. I'm joking, obviously. Euro yen, similar thing, moving down slowly. Dollars picking up, euros continue to move down, pounds continue to move down. Yen, stable. It's not really making any new highs for the day, but definitely stable. What pairs am I trading? Euro yen, euro dollar, S&P, and copper. Can you look at DAX? I can look at DAX. DAX is very interesting, actually. I was saying this yesterday. The DAX has benefited really well from earnings. However, I'm not in this position, just an FYI, just for honesty. The DAX has done very well off earnings, but the Eurozone basically tells a different story for the DAX. So I am considering going short, and this would be, well, at the moment, it's very under-researched, so I've not really planned this trade properly, which is something I need to do this weekend. It's on my to-do list. But if we look on the daily time frame, we've got this resistance trend line, if that's what you want to call it. Price is all the way up here at all-time highs, about to reach this trend line. And again, it's been pumped by earnings, which obviously, that's natural. I'm not saying that's a bad thing, but I think the DAX is very overvalued for the current state that the Eurozone is in. So we'll see. But again, that's just very under-researched opinion at this moment. News in 2 minutes? What news is there? Oh, yeah, you're right. Let me get rid of this again. We've got PMIs for Canada, 52.3. Slight uptick since previous. It's basically on target, really, or as expected. Then we've got consumer sentiment for the dollar, 74. Previous was 71. Actually, that's good for the dollar. So if we've got consumer sentiment going up, that's good. Let's see if it's probably not really too much of an effect. The dollar is moving to the upside, which is nice. So it did help. Let's see the Canadian dollar. We'll have a look at USD CAD. Yeah, continuing its move up. So pretty flat for the Canadian dollar. Very good for the US dollar. On top of NFP as well. Definitely not too bad. Oh, it's Nick's birthday. Yeah, you're right. Nick, I don't know if you're watching this, Nick, but happy birthday. Hope you have a good one. Hope you're doing something nice this weekend. Don't trade news, trade technicals. Don't trade news, don't trade technicals, trade economies. I said this a while ago, actually, that as, well, obviously for me personally, I'm not trading the markets or technicals. I'm trading economies, but the markets are just a proxy. Oh yeah, true. Actually, Sean, you just reminded me the DAX is also in that sort of Christmas rally. So right now is probably a bad time to short, actually. Didn't even consider that. So probably won't be shorting the DAX, actually. I might wait until sort of January. Good point. I appreciate you saying that, actually. Might have missed it. New Zealand dollar. Let's have a look. Yeah, I actually don't mind trading news because I have a very specific way to do it. But it's actually quite rare that I will do it. Anyway, New Zealand dollar. I've been wanting to go short for a long time. I can't get my words out. I actually have been short in this market, but not quite, well, not even close to as frequently as I've been short in euro dollar. I called this trade on Sunday in my weekly watch list video. The problem is the market gapped at my entry and it hasn't come back since. So I've not actually taken this trade. I've been waiting for a possible retest of this level and it just hasn't come. So that's quite unfortunate, but I remain on the sell side, same as euro dollar. New Zealand dollar is also in my scope to go short. But again, you know, I won't be taking any more trades really for the rest of this year. It's my only focus now is getting out of positions, unless there is some super clear trade that I can't miss. New Zealand dollar doesn't have good fundamentals. Exports down, recession looming. Yeah, exactly. Sean, they should get you on the show. You cover the economics before I do. We should do a joint segment together. Anyway, what was I going to say? I can't remember what I was going to say. But Eurodollar's moving down. I wonder if MetaTrader's unfrozen. It hasn't. That's so frustrating. Whatever. Can't do much about that now. Let's bring back trading view. There we go. Okay. Yeah, trading news can be a very profitable thing, but it's got to be done with a rule set. So, for example, I traded news on Eurodollar today. So as soon as we got this NFP result, well, unemployment NFP, today's news for the dollar, obviously we saw this rise. I shorted it really as soon as we got up here. And I wouldn't recommend other people to do that because it's very risky. But yeah, it can be a great move to make if, you know, again, if you follow rules and you manage your risk. And this is why I say normally news moves don't bother me, because we generally, depending on the heaviness of the news, we generally do see a correction pretty quickly. Does the market take notice of Fed speakers other than JP? To me, it appears not. Nah, no one really cares about anyone but Jay Powell. Daddy Powell is the market mover. No one else. No one can step to his place. No. Well, actually, I'm not joking because it's kind of true. I don't, unless there was something really shocking, something really surprising, generally no one cares because it's all down to Jay Powell anyway. Well, kind of. Yeah, exactly. Okay, cool. We have got, about 10 minutes left. So my last 10 minutes on Friday with you guys is nice. ETH at 4K. I don't know. You know what's really sad? When it was, I think it was around 2020, maybe 2021, I was actually quite involved in crypto. When I say involved, all I mean by involved was I was putting money in quite frequently. I didn't have a clue what was going on. And it didn't really do anything. I'm sat recently looking at Bitcoin, looking at Solana, and now Ethereum as well, just thinking, man, if I just continued the deposits and held, I'd be quite a wealthy man right now. Are you holding SPX? Yes, I am. So this is my S&P position here. So yeah, looking to scale in at some point. I've just not found the opportunity yet. This trade's break even, so there's no risk really. What's your thoughts on Swiss yen? Currently in a short position. Currently in a short position as there as well with your weekly research Morgan Stanley position. Okay. Yeah, Swiss yen remains short. Let's just see. So it's still on the EdgeFinder here as a short, which is nice. So actually, I get asked quite a lot on what my process is and how I use the EdgeFinder. So step one was looking at the bank report, seeing Morgan Stanley has taken a short position. Then I'll go to EdgeFinder. I'll see Swiss yen, bearish. Let's look for a short position. And it's really as simple as that. For me, generally, obviously, there's exceptions and things, but yeah. But I was saying yesterday that this market looks okay to sell. I'm still happy going long on the yen, short on the majority of other assets or currencies. The moving average is still moving to the downside. We've had the cross, they're fanned out in a quite healthy way. The only things we rejected this support level, but it wouldn't surprise me if we continue to move down, break, retest here, and then continue down again. So yeah, pretty straightforward, simple stuff. I think the markets, in my view, are very clear. It's buy dollar, buy yen, sell euro. But you know, I'm right until I'm wrong, and then I'm wrong until I'm right. So what was the biggest mistake you would avoid with today's experience? I've got two things, Anna, to answer that question. My first mistake would be being a retail trader. I put a tweet out actually the other day. If I knew now what I knew when I was 16, I would have taken a very different path. I would have gone into finance and economics. I would have gone into an institutional background rather than retail. Because my goal is to open a fund. Now I can still do that. I would just need to get certain education, sort of degrees, certificates. Then I'd need to go and get regulated. Then I'd need to make networks, make a network and get investors. And it's just so much more difficult as retail. So that's the first thing that I would have done. But you know, for a less serious answer or a more basic answer, then it probably would have been education. Just get a mentor. Stop bouncing around strategies. Stop expecting the markets to just work as you want them to. It's just not as simple as that, unfortunately. You're young enough, mate. No time like the present to do that. Yeah, Sean, exactly. But the thing is, I'm going to go on a little bit of a yapping session here. But the thing is, I did actually call the FCA and I said, what can you know, I told them what I want to do. And I said, can you tell me what steps I need to take to do this? And they said, I need $250,000 liquidity, which I don't have liquidity in $250,000. I would need a compliance officer that's already FCA regulated, and I need to have a degree from a university in accounting, finance, something in that genre. So to be honest, even if I had the education, the liquidity would be an issue, and also hiring someone would also be an issue. So there's a few roadblocks here, but you know, that's what the Cayman Islands are for. I'm actually going to set up there. Create a Wolf of Wall Street situation. Anyway, that's probably not the best thing to joke about because that could be used against me in the future. So that was all jokes, all humor. James, you mentioned you are already trading funds. Yeah, so the funds I trade are my family funds. So I run my own family office for my family. So the way, again, it's specifically in the UK, and this isn't financial advice. I don't know in your countries how it works. But in the UK, if I have a prior existing relationship with someone, it could be a friend, family member, whoever, I can take investment from them. But it's not actually called an investment. It's, legally named something else. But I can't go to you because I don't know you. I have no prior existing relationship, and ask you to invest. But I can do that with, my dad or my best mate or my girlfriend or whoever else it may be. So yeah, I run my own family office essentially, or my own family fund, I should say. So much stress in fund management. Yeah, it can be a bit hairy. Like like at the minute in this euro dollar shorts, I'm also in this in the fund account. Yeah, it's stressful at times. No, I'm not using PAM. I do have a PAM service, but it's not for this. Account management and PAM and things are also ways around actually making a legitimate fund. But anyway, we're going off topic, and I don't want to start giving people bad ideas because it's a very, very dodgy road to go down if you do it incorrectly. If you make one bad step, you can be sued, you can be fined, you can be in jail. So please, if you're ever considering doing something like that, please go and get professional help and consult a lawyer. So EU targets, to be honest, I think my real target is down here at sort of 1.4. However, my personal target is up here at 1.48 roughly, and that's just because I want to get out of the trade. I don't want to be in this anymore. Long-term target is parity. Now, I don't know if we're going to get to parity. I'm going to reassess that, do research, come back fresh in January, and then I'll reassess. But at the moment, the way I see things, parity is definitely in view. Yeah, imagine that trade only not just being with your family's money, but with some cutthroat investors. Yeah, investors are a difficult one because there's so many things you need to get right. France 40. I don't think I've ever looked at France 40. Seems to be doing quite well, actually. The weekly looks nice. I quite like this. We trailed just underneath this 200 moving average, created support, wicks to the downside, a really strong weekly candle. So actually, again, from a technical perspective, it looks quite good. I am just very hesitant on buying anything to do with Europe at the moment. It's just a bit of a little bit of a red flag, in my opinion. I'm not saying necessarily in terms of affecting the indices. It's just the whole of Europe, in my opinion, is just a little bit of a no-go zone in terms of buying, similar to the DAX, really. Although, we are in the Christmas run, so I could expect a nice continuation to the upside. The only other thing here is this daily 200 moving average could act as some resistance. However, if we can break this level of sort of, consolidation, resistance, whatever you want to call it, and possibly retest and continue up, this position here wouldn't be a bad buy to go on this retest long. But yeah, German 40 screaming higher. Yeah, I think I take back what I've been saying about the DAX. Sean reminded me that we are still in seasonality. So as well as the good earnings, it's definitely helping the DAX. So yeah, probably we'll wait until January really to actually start looking to do this. But I think the idea is there. So we'll see if we can execute. Swiss yen, yeah, we've already discussed Swiss yen, but overall, I think shorting the Swiss yen is fine. I think it's quite a sensible move to make. I think the yen has got a lot of upside potential. Excuse me. And just purely because of the yen, I would be quite happy to sell. So the yen is quite a dominant currency, really. Wow, dollar's really moving to the upside. Euro's really not having a good day. Same with the pound. Love to see it. I wonder actually if I'm close to my average price. Oh, it's coming down. Oh, it's so beautiful. Makes me so happy. There we go. Emotionless trader, almost robot-like. They call me the Terminator. Hi, yesterday you had a sell on euro dollar. Did you close it? Oh, Olaf, Saf, you just saw my euro dollar positions. I'm still in all of the shorts, so my euro position is going to give me a very happy weekend. Good stuff. No, Osaf. So I don't have stop losses. So there you go. Don't want to bite on my Danish kroner to check across. Sean, I've got no idea, mate. Both currencies I just don't even pay attention to. Well done, mate. That must have been painful. I've got to say, I was a little bit tense before we had NFP. Obviously, this is actually something I say. I think actually it's the last thing I'll say. I think before my time's up. Oh, it is up. Actually, let me just make sure no one's waiting for me. I don't know actually if I'm the last person on today. Let me just check before I go on a ramble. Chris is on, but not yet, I think. Anyway, I think it's fine to be an emotional trader. Oh, sorry. I think it's fine to be emotional, but you've just got to obviously make sure that you're not trading based off those emotions. So if you need to go for a walk because you're stressed, or you need to go for a walk because you need to get away from the charts, that's fine. But that's called managing the emotions, not being emotionless. Because humans, it's just not, it doesn't work like that. You know, the stoic, dark, cool Instagram people, Twitter people will tell you to be emotionless, but it's not possible. But yeah, anyway, that's just what it is. 1 second, guys. I just need to reply to a message. Sean, yeah. I mean, it's not my show, so I can't invite people on, but yeah, I'm sure if you DM Nick or A1 Trade or something. Euro just dumped another 80 pips. Yeah, I think I'm getting close to my targets. Well, actually, it's not really close. My take profits are down here. But I wish I could see it's completely frozen. Can't even see my P&L. Can't see anything other than the chart. So it's a little bit frustrating, but you know, we don't care about the P&L because it's not at our target yet. Made you look. Alan. Not cool, man. Okay, guys, I'm gonna head off because Chris is here to take over the show. He's always good. You're always in good hands with Chris. So I'll leave you guys to it. Enjoy your weekends. I hope you had a great day, and well done to anyone that did make some money through the news. I will see you later. Thanks for having me.
'Twas the night before Christmas, and all through the house not a creature was stirring, except Chris Pulver, apparently, who just took a trade on gold. It's the middle of the night. I'm not really sure how he did that. Pulver alerts are now available at A1Trading.com. Get exclusive access to Chris Pulver's trades with A1 Trading's Pulver alerts. Watch as Chris Pulver, a seasoned trading pro, navigates the markets, manages risk, and applies a disciplined trading process. Join today to level up your skills and learn from Chris's wealth of experience. Get Pulver alerts now.
Hey everybody, happy Friday. Big shout out to James for going those extra few minutes. Sorry I came in just a couple minutes late. Just had a busy morning session and a lot of trades going on, sending out some updates to followers. We're going back here. Okay, very nice. So got a lot juggling today. We're sitting up at fresh all-time highs again on the S&P and the NASDAQ. We had a big rip up out of the, look at this futures move, man. Just a nice little 8:30 candle, solid breakout right around 9:30 opening bell, and this thing is up. Let's see here, about 90 points. Not too bad on the old NASDAQ futures. So pretty straightforward trade. Even if you did the 9:30 breakout candle, which is what I like to do usually. So even if you box this one in, you still had a nice breakout. But that 8:30 candle with non-farm payroll, which today came in positive. Have a lot to discuss here just based on the news the next couple of weeks. We've got 6 central bank rate decisions. We're looking at some cuts coming. We're looking at a lot of shifting in monetary policy. We've got inflation data that's expected to be a little bit hotter next week. So for today's non-farm payroll, we beat on the U.S. jobs front. 218 came in 227 with a positive revision. This is my favorite, from 12,000 to 36,000. Oh baby. So green on the job side, average earnings up as well, and unemployment rate ticked up a little bit from 4.1 to 4.2, still historically low on the employment side. I'd say job numbers overall are pretty darn good. The market is just hanging out a little bit higher. I'm wondering if we just continue to drift up today. I'm watching to see if my SPY will hit like 609 and change. I'd ideally like to get to like 609.50, up to potentially 610 on the day, or at least tap that level. And then AMD, I'm looking for a move up into, let me actually show this here. So I'll keep this on the SPY just for a reference, and I'll keep this one on AMD. Right now it's 142.50, and I'm going to keep a close eye on this. If this gets up into 144, 145, I can turn that little butterfly spread into a nice gain. So we will find out. Going back to the news, like I said, job numbers coming in pretty solid. Going to the news next week. Okay, I want to talk a lot about, it's very inexpensive to be hedging right now. I just don't think it's a good idea. Like, I'll say this. I put a hedge on this week on SPX. I did a 6050 by 6055 bear call spread. That was in Pulver alerts, and I'm probably just wasting the $250 on it today, or by today, because it was expiration. Now, moving forward over the next 3 to 4 weeks, I'll show you how cheap it is to actually put on like a bear put spread. You can basically pay like $4 to make 14. That's pretty solid. I want to talk about that, and I just think as long as I'm still going to play some hedges. I think I have to, just in case there's any type of late year surprise. If the Fed does something to, I don't know, jerk the steering wheel towards the end of the year. I don't think that's really the case. But I also don't want to go unprotected in case the market decides to dip a little bit, because we're melting up. We're not making broad market highs. We're making Mag 7 highs. So we have had this interesting rotation into, it was a broader market lift where like utility sector's killing it, financials are killing it, Russell small caps started to catch up in a big way. Now the NASDAQ is running. Why? Because NASDAQ is, heavily influenced by Mag 7. Apple's at all-time highs. Meta hit all-time highs. Amazon hit all-time highs. And Netflix has hit all-time highs. I know that's not a Mag 7, but it was, the old Fangman stock back in the day. So anyway, we're kind of back into that like concentrated Mag 7 leads the way, drags the ETFs higher, and broader market is kind of leveled out. Advanced decline line has not been all broad. We still have a lot of stocks that are above the 50 moving average and the 200 moving average, but not making like fresh all-time highs on a lot of stocks. It's only a few. So going into next week, we have 2 weeks ahead. We have a lot of data to digest for the market. 6 central bank rate decisions, starting with the Aussie. RBA is looking to pause next week. That's a Monday, 10:30 p.m. Eastern time decision. And we'll see what the statement reads, but forecasted to pause. I was actually surprised to see the forecast coming into the calendar today. I expected this to be like a Sunday, Monday. Anyway, so coming into the calendar here, we also have U.S. data on inflation. So CPI forecasted at 2.7. Here's the previous prints. Okay, you can track it on your EdgeFinder. We got down to once we tap below 3%, we cracked that 3% mark. We went to 2.9, 2.5, 2.4, and then we are now 2.6. Now we're forecasting 2.7. I don't know if a 0.1% change or increase or slightly higher inflation is going to break the market. It probably will not. But this is also watching the Fed with a much higher probability of still cutting. Look at this. This is stupid. This thing has gone from around 72% this week up to 79, down to 64, up to 88. Now it's at 90.8. Probability is just gaining that the Fed's going to cut in 2 weeks. So, I mean, for this thing to drop aggressively would be It can happen, but it's I'd say improbable based on the statistics we're seeing right now. The market is essentially, baking in that we've got another cut coming, which is also why this melt up I think is taking place. And the run and melt up and drift path of least resistance continues to be this market just wants to go higher. So don't fight it. I'm not calling the top. That is for sure. If it melts up, it melts up. That's pretty easy. Had some credit spreads winners today, which is nice. All right, let me check and see here. Well, that was quick. That was up to 34 cents. Now it's at 20. Come on, AMD. Don't be a turd. Give me something good at these strikes. So the nice thing is I've got some butterfly trades on, and if you trade butterflies and options, they look like this. Okay, so I have risk, I have a profit trap, and I have risk. So that's what a butterfly spread looks like. This is just an equidistant butterfly spread. So my 145 price on AMD, if we are, trading at 142, this is live price. So I need to see if we can get into this little area. This level is going to be 143. So if we get above 143, I start to see some of this profit trap. Today's expiration, we get into 144, 145. I've got potentially like a 200 to 300% winner on that position. So I'll see if we get lucky. Just watching some price, but chart alarms are set. I'll keep an eye on it. Let's go back to the SPY for a second. Highs on the SPY, we're trading at 0.36% higher. The Qs are just killing it right now. Big gap from Tuesday to Wednesday. Wednesday was a nice bullish day. Thursday was a pause. Friday more all-time highs today, and we're pretty relentless. The Dow's up 0.14. The Russell up 0.33. Again, NASDAQ leading the way. We'll check on some Mag 7 here in a moment. Let's look at the heat map for a second. Heat map is United Healthcare. I'm seeing is red. I kept probably giving the news this week. That's unfortunate, but that's what it is. NVIDIA flat on the day, but you got some other semiconductors hanging in there. AVGO is up. AMD is up. I need AMD to get to 145. You can do it. We've got some big tech here. Oracle up. Oracle has earnings next week, if I'm not mistaken. Adobe is up. Palantir up again. Jeez, man, this stock is relentless. I wish I just had some shares, but I don't. I just have a bunch of options. Apple, sitting near those all-time highs or at all-time highs. Amazon up to some fresh highs again today, up 1.7%. I mean, anyway, Mag 7, these like massive boxes here on the heat map is market cap. So these are big companies showing some pretty good gains. I'd say broadly, we're probably seeing more stocks higher than lower. If I go to the homepage here, we're looking at about 64.3% above the 50 period. We got the advanced decline, 61.5% of stocks advancing so far today. And like bull market is still pretty much in play. Yeah, I mean, very much in play. 64+% of stocks above the 50 moving average, 67% of stocks above the 200 moving average. Let's go to the fear and greed index for a second. And let's also go to AAII. I just want to make sure I'm not missing any type of like big shift in sentiment. I mean, this is pretty wild. We're actually at neutral on the fear and greed index. I would think based on stock momentum, we are, in the greed territory, but this shows neutral. Why is that? Market momentum, extreme greed. I think we can sense that. Stock price strength. Net new 52-week highs and lows. That's wild. So we have extreme greed on momentum, but we have stock price strength at fear. Market breadth, fear. Put call options, greed. Market volatility, neutral. Safe haven demand, fear. Junk bond, fear. Weird. Did this all just shift recently or something? I've seen safe haven demand, like, I don't know. This is weird. So it's like it's almost just centering itself. So safe haven demand and junk bond showing fear. That's weird. It's like people are just loading up on safe haven just to be safe, but we're just kind of riding out this momentum as long as it wants to kick. Okay, let me check sentiment here. So 48.3, 1 year bullish highs at 52.9. This should have, I'm trying to think when this thing closes. This is a Wednesday print. So the next one should be, let's see here, 12/11, which will be next week on Wednesday. I mean, it's not extreme. It's like it's getting a little bit frothy on the bullish side, but historical averages, they're slightly tilted bullish. When we get up into the high 40s and we crack 50, then we usually look for some type of pause or correction. So I don't know. It's going to be interesting to see how these sentiment readings play out over the next couple weeks. So it's kind of officially like Santa rally window. Technically it's the week of Christmas, week of New Year's is called the Santa rally. I've always kind of said this holiday window is Thanksgiving to the end of the year. So Thanksgiving into New Year's, usually the holiday rally. Not a lot of disruption. I think the only thing that really affects the market is going to be the Fed. I don't think the Fed's going to do anything to disrupt it necessarily, but that's where the potential lies. And I say that as in, okay, let's say they cut, but they're staring at higher inflation. I mean, just hypothetically here, let's say that next week on Wednesday with CPI data, this thing prints 2.8 or 2.9. Is it enough to rattle the market? Not necessarily, unless the Fed rate decision for the 18th all of a sudden shifts from 90% back down to like 60%. Then we go into like the 18th with like, is it more of a toss-up trade? Is the Fed still going to cut? What are they going to say at their press conference? So that does make it pretty annoying, but that's just the reality that we have to be mindful of. So reality is inflation is going higher. We've talked about this for the last couple of months as well. With the election especially, I do think that the lower oil prices and the pestering of the lows at like 67, 67, oil's not above $70. When we keep tapping those lows, if the U.S. is going to be drilling domestically and pumping supply, that also keeps inflation somewhat contained. So we can have inflation in services and housing and other things. I mean, cost of living has been about 4+% higher for the last 4 years, and it's being felt. Okay. But we're being told that, we're targeting 2%, and that's the Fed's mandate and blah, 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 blah. But we're not anywhere close to 2%. Real inflation numbers, not 2.7, not 2.6. They're not even close. But this just means that prices are going up. They're just going up a little bit slower than they were a couple years ago. Last year we were at 3+%. Before that, we were up to 9, and we had to come down to that 3%. So it's basically, the reality is we're operating within about a 2 to 4% inflation window. And for the Fed to keep saying with conviction that they want us to be at 2%, we're so far away from that. And a lot of other forces have to work in order to get us to 2%. Now, that being said, I will also say that the 10-year yield is cooperating. Okay, it's down about 0.55% today. I don't necessarily look at this chart and say, okay, we're at a technical level here. There's not a lot of technicals to this, in my opinion. We're either going to continue to go lower with inflation pressures easing, or we are going higher with the bond market and the yields continuing to say, look, the Fed is allowing inflation to bubble, and if it starts to resurface and start to overflow a little bit, then this 10-year yield can go up. So I keep saying in one chart, I would summarize the ability for the market to keep making higher highs and have this good optimistic outlook. It's got to be lower on the 10-year yield. That to me is where I'm going to be more bullish than I am right now. If this is sideways, then I'm obviously like fairly cautious, maybe cautiously bullish, maybe just holding on to positions and just waiting for good opportunities. If this is going up, I'm looking a little bit more to a correction in 2025. Okay. All right. So watching that 10-year is going to be important. Let's take a quick spot check on some China stocks. China's up today. What the heck? You can do it. HSI up 1.56. Alibaba, Gap higher up 2.44. Baidu at 86. FXI 30.88. KWeb up a little bit, 1.45%. JD to 37.64. I've got a 38.50. Give me that. And then I've got Apple with some calls. Here's my Mag 7. Where are you at? Mag 7. Apple hanging out near all-time highs. Amazon at fresh all-time highs. This thing is ripping. I did a roll this week on Amazon. I rolled it out and up. So now I'm covered at 220 out to March. I will continue to roll out and up with a stock that I really like. I'm also going to be looking to add some protection, probably some controlled protection at some point, maybe a bear put spread. Google looking a little bit better at 174. I need this to stay above 155 and 160. Meta cracked an all-time high today. Microsoft, somebody just told me this morning in an earlier session that there's some news on Microsoft with potentially adding Bitcoin to their treasury, a la Michael Saylor style. And so if Microsoft is getting that type of run, does this all of a sudden become a weird large tech, Mag 7 proxy around Bitcoin? Yes, no, maybe. I'm not sure. But it's had a pretty good run from the 200 moving average at 411.50. I have a debit spread. It's a 430 by 435. I mean, right now that's looking to be in pretty good profit out to December. Let's check on that one. This is in the Pulver alerts. So if I go into Microsoft, right? That's MicroStrategy. So here's my 430 by 435. I also have, I had a bunch of these earlier. These are like ratio spreads and other things when we had that August dip. So right now that trade is showing, what did I pay on this one? So I paid 260 or 264, 1924 minus 1660. I paid 264. And right now I'm looking for a max profit of $5. So what's it showing for close? 405. Okay, so I still got another 90 cents of credit that I can have. Right now my trade is it's out of the money. So that's actually, I take that back. It's an in the money debit spread, but this would be closing for full profit with the maxed out at 435. So if I get this, let's say the 264 debit, if I see it trading for like 475, 480, 485, depending on how much time is left. I'm only in this trade for another couple of weeks. It expires on the 20th, so that's 2 weeks from today. So if we just have another holiday melt up, nothing majorly disruptive, then I'll end up taking that profit. So I'll let time do its thing, see if we get up towards those highs again. Obviously, if the news next week, like I said, if they're going to be adding Bitcoin and that's given Microsoft another little surge, then that trade looks even better. Okay, Netflix also cracked some all-time highs this week. We're just nearing those, or we're at those again. NVIDIA, I still don't think NVIDIA has much room to run past 150 to 155 in the short term. Okay, in the short term. Now, I say that because we are sitting around 475 bars since we tested a 200 moving average, which is this red line. Look, there's two ways I want to play this. I have some trades in here that I'm willing to kind of own and repair. If I get assigned any NVIDIA, I'm going to take it. Okay. If we have some type, this is what I could see happening. If the markets are just kind of drifting higher, I can see NVIDIA just doing this. Just a lot of sideways, allowing this 200 moving average. I'll put this in red here, allowing this to catch up. So if this just slowly catches up to price, that becomes a dynamic support level. Okay. So what I'd be looking for would be if price just goes sideways, I'm not necessarily looking to trade, a bear move on NVIDIA, or I'm not buying it at these highs, but I would say that if we came down to the 200 moving average, we're really interested in establishing some fresh positions. If that doesn't happen and we just go sideways, then I'm looking to see if and when we bounce off that level, starting to establish a small position there, and then look to see if we can, resume this uptrend. But I don't expect there to be big gargantuan rips higher on NVIDIA without at least finding some of this balance, because it is now at a point where we don't see a lot of bar counts get over 500 bars on a daily time frame. The S&P is at 270 or so, 280. The Dow's at 270, 280. The NASDAQ has already hit the 200 moving average with that August bottom. But you've got a lot of stocks that just look like they're drifting higher, stretching away. I think the Russell's already hit it a couple of times. So anyway, just saying on NVIDIA, there's levels I want to be participating. There's willingness to own because the stock is fairly cheap after the split. So I think the premiums are really solid. I would just be using options to, generate income trades on NVIDIA. And I mean, here's an example. If I were to buy shares right now in NVIDIA, okay, if I bought shares of NVIDIA, let me see what this looks like as a buy right. So if I say, okay, I'm going to buy NVIDIA right now, and I'm going to go out to the end of the month and sell an at the money covered call. So if I bought shares at 144.50, okay, I buy shares at 144.50, I could sell a 145 call and grab $4. So here's an example. If I buy the shares for 144.49, take on a covered call out to the end of the year for $4.30, I own the shares at 140. I get it called away at 145. That's a $480 income play on something that's going to cost me about $7,000 in margin or about 14K in cash. Now return on capital, that's not terrible. Let's say it's a cash account. So 481 divided by, let's say 14.4. I mean, 3% return on capital, which isn't bad within about 21 days. Now, is that the best trade? I mean, if we go to the downside, I don't have any protection to the downside. So maybe the better plan, I've got the 138 by 137. I've got some other, let me just put another trade up here. So what do I have in NVIDIA? I've got a 132 by 130 ratio spread. That's looking pretty good for some full credit there. Got the 138 by 137. That's a bull put spread. That's looking pretty good there. And then I have the August sell-off. I got crazy low on a wide credit spread at 75 by 55. So, I mean, I'm sitting $1,200 on 10 accounts. I mean, I've got like $10,000, $12,000 of profit. Okay. So it's profit with no ownership. But I want to generate some income. NVIDIA is a nice way to collect some premium. I'm just curious, if I bought the shares, could I protect the downside? Actually, I don't know. Maybe the best way is just to put on another credit spread. Let me do this. Let's go to January. If I put on another ratio spread, let me see something here. So ideally, this would be, if I had a choice to see like where is price going to go that I'd be interested, it'd be the 100, the 144, or the 200. That's where I'm interested in price for me to take some more action. Okay. So if I were to buy NVIDIA and it goes higher, I can turn that into, maybe a $4 to $5 income play over the next maybe 14 to 20 days. Is that a good trade? It's okay, but I don't have any downside protection. And that's probably the most important thing for me, is if I buy it at 144 and this thing dips to, 130 or 125 or 120, I don't want to spend my time repairing the trade when I could just hopefully stay patient, wait for my level to get hit, or wait for price to find, an attractive level and some dynamic support, then start establishing that we've got some higher highs in the works. But I think this bar count is pretty overstretched, and I'm waiting to see. I can't believe the SPY today. This thing has got 1, 2, 3, 4, 5, 6, 7. This is so stupid. This thing did it just ripped right out of the gates, and it's done nothing for the last hour. Wow, that's crazy. All right, so do something, please, on the SPY. Go to frickin' 609 and change. Go to 610. Do something. If we come back and fill today's gap, I'm gonna be kind of pissed, because that's a no. To me, that's no man's land. I want to get to 605 today, or I want to get to 609 and change. I just have some trades riding on it, so yeah, I'm gonna be angry if I don't get something, even though it's been a good week. All right, that's NVIDIA. We'll stop talking about it. Tesla up to some fresh highs again today. Berkshire Hathaway watching this, this November low. Same type of thing. To me, this is a proxy for a stock that has cash at the ready, a stock that has cash to deploy. It's crazy that Berkshire Hathaway is in the financial sector, even though it's Warren Buffett's company. They are a net seller of stocks for the last quarter, and they have a bunch of cash on hand. And I'm sure that it's for good reason. Maybe they're early to the party, but I'm sure they'd rather have cash and sitting on 4.5% to 5% return on that capital, risk-free, versus being exposed on higher valuations when things have ticked up higher. The S&P price to earnings ratio, by the way, has ticked up towards 26, which is historically pretty high. I think I had that screenshot yesterday, right here. Did we talk about that yesterday in session? I think I did. I talked about just looking back in time, going back to 1989. We haven't seen a lot of the price to earnings on the S&P above 25. And so the last time we were up there, that was early 2000s, where we did obviously have a bit of a correction. I mean, that was a freaking, .com bubble. Through 2006, 7, and 8, the price to earnings was actually in the teens. Obviously, we had a great financial crisis there. We get into the valuations during COVID. That's when it was high again. 20.6 in 2019, 30.7 during the COVID crash. That would have been, leading into that crash, and we had it. And then it was kind of a reset. So there's just pretty frothy premiums right now in the market. Valuations are high, expectations are high. You know, we've said this for the last couple of months, especially. This market is basically priced to perfection, but earnings and margins continue to not disappoint, and therefore the melt up continues. Okay. All right. Yeah, I talked about that. The Microsoft thing, it should be next week. It should be next week on like Tuesday or Wednesday. Is that right? Tuesday would be the 10th, 11th would be Wednesday. I'm not sure which day it is, but I'm curious what it does. I don't know if it's going to be I mean, it could be a good thing for Microsoft. Bitcoin is trading at 99.3. We had that little spike up. I mean, that was an interesting daily candle to kind of tap through 100K, get up to 103 and change, and then reject. I don't think we necessarily have to stop. I mean, I've got a technical level which might be subjective, might actually mean something, but right around 107.70 or 107,700, there's a symmetry measure, and perhaps we have a bit of a reaction there. But I mean, longer term, I'm going to remain pretty bullish on Bitcoin. You know, there's all sorts of cases being built. You know, the big thing with AI and Web 3.0 and Bitcoin is that there's scarcity. There is, you know, there's this decentralization movement, and there's countries that want to get off dollar dependency. There's a lot of things, and right now we have an administration that is either pandering to the crypto crowd, or they truly are going to put something in place regulatory wise that is pro crypto. And if that's helpful, great. But you know, be careful on the Hawk Tuas, be careful on the Doges, be careful on the whatever meme stocks crap is out there. It's like I'm pretty much just trading Ethereum and trading Bitcoin. So call me old fashioned, but it'd be like trading to me the Nasdaq and the S&P of crypto. Two of the largest market caps. I'll stick with those. There's ways to trade them now. There's ways to trade ETFs. There's ways to trade options. I'll stick to those. Okay. All right. But Bitcoin just hanging out right around that 100K again. I saw that Nick actually took a trade on Bitcoin this morning, which seems like a pretty darn good entry. So good stuff on that. Ethereum at 4,000 continues to test these previous highs. We did eclipse this May high, which is pretty nice. And then we have this other one for March. So if Ethereum is on a mission to get to all-time highs, it's back up here towards 48.75, which percentage-wise, that's still another 21% higher. That'd be pretty exciting. I need this to stay above $60. It's well above that. I closed out a couple of my debit spreads, credit spreads. I have some ratio spreads, so Ethereum's still looking pretty good. EETH is my ticker. EETH is currently up around $9,700. No ownership, just options, just income, but just going to let these kind of run out and expire through December and January. Copper, I said copper. If I'm going to get more bullish on copper, I've got to see some more animal spirits out of China. I like this trend line, though. I mean, this trend line looks okay. This meaning this trend line here, but let's see what we get. You know, do we have a bull market still on copper? Are we still pretty structured? There's a lot of support down here, a lot of resistance here on a much higher time frame, going back years and years and years. But like I said, I think China is a big buyer of copper. We need to see some global infrastructure growth, and you know, I mean, we haven't seen copper get any love from AI, even though it's, you know, in every household and every. I mean, you'd think that copper is like in everything, but whatever. So I mean, I like what it stands for. I'm just trying to read out, you know, is this a good spot to be getting long? Japanese yen, no trade. Let's go oil, gold, and silver as well. So oil, I keep talking about this 67 level. Okay, this to me is how the U.S. can keep fighting inflation. If we sit here at these lows or we break these lows, U.S. inflation numbers will be okay. Okay. So they still might print slightly higher, but if energy prices are lower and gas at the pump is lower, consumers don't feel it as much. If the grocery prices are okay, gas at the pump is lower, consumers don't feel it as much. You know, I mean, data points, I don't want to watch it go up by 1/10 of 1% each month until we're back above 3%. You know, I mean, we've had a lift out of China. We're looking at tariffs. We're looking at global you know, economic friction. All these things are potentially bad, but if the U.S. is going to be pumping supply and energy, it's going to help. It won't hurt as badly. So I just think this 67 floor is going to be really, really critical. Nat gas same thing. I mean, I'm sure if oil is dripping lower, then we're probably going to be watching nat gas drop lower as well. So I'm not short. I'm just going to wait, and I'll scoop up some amazing bargains if we get it. Gold, still boring. This is now 8 or 9 days of indecision. 8 or 9 days of indecision. So just keep an eye on it. If you're a really active gold trader, then you're probably watching this tight price action in here, waiting for some type of direction. I wouldn't be surprised if we still have a move lower. We'll find out. If we don't, and this is just a breakout higher, okay, fine. But I'd still like to see this happen. A measured move, finding the 200 moving average. This is another one that stretched out near 300 bars. So very similar to the S&P. Last time we tested the moving average was back here in, looks like October of 2023. So that puts me up around 296 bars, 295 bars on gold. I mean, that's a decent bar count. That's getting up there. So again, whether or not we have a move lower, okay, maybe we do, maybe we don't. But if we see that we're stalling at these highs, we had a big move away from the distance of the 200 moving average, I could see price doing this. Sideways, if it comes back up to the highs, capping the move, sideways, 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 letting this moving average catch up, finding dynamic support, and then I'd be looking to buy low. And if we can stay, adamant about buying these lows, there's obviously profits to the highs. But if we buy the lows and we break longer term, there's good gains there. So I'm just, playing the technicals here. If it pulls back to a nice attractive level, I'll start participating, but I will wait. Okay, silver pretty well supported around 29.50 and really well supported at 26. Measured move still hasn't been hit at 35 and change. I'm long silver, trying to get into the 40s. Bitcoin we talked about. See if we crack that 103,000 mark again. Some of the peripherals, BITO. Let me put a chart alarm here at 26.92 for some fresh highs. And we'll see if we hit some fresh highs. So my calls on BITO are out to 2026. I don't intend to hold them that long, but I'm looking to see if we keep making fresh highs in Bitcoin, if I start inching up higher. My call options on BITO, I'm up around $22,000. I don't know. I'm not saying I'm arbitrarily having a profit number, but with a call option, it's time sensitive. So if I get this thing up to 25 grand, 30 grand, I'll probably at least protect some of those profits on the long calls. IBIT, just going to hang in there, have some credit spreads, doing some dollar cost averaging, own some shares. We go higher on Bitcoin, we go higher on IBIT. FBTC, same thing. MicroStrategy, I'm actually wondering, it's like, what do we get on MicroStrategy? I don't want to do something necessarily out of the money. I mean, I wouldn't want to put a ton of capital into MicroStrategy unless it's at like maybe sub 300. I don't know. I guess I'll just stick with the IBIT. It's like I like this stock because it's just crazy high premiums and high volatility. But the way that we just blew through every level and we were kind of front running Bitcoin, it's just slowed down a little bit. So, I mean, I've got some bull call spreads. Those are out of ways, like in time. So I'm not really worried about those. I'm just wanting to see, do we have some levels that'll be a little bit more attractive to start selling some more premium? And I would say right now, this is like the IV has gone from a big swell down to a contraction. So I feel like I, maybe miss the opportunity to, jump in here, but it's hard to do it when the thing's just ripping higher. I don't like chasing and selling premium when it's like, I got to sell at higher prices. So I didn't. Coinbase is fine. Ethereum we talked about. We did the Mag 7. Let's get to some currencies now. Let's go DXY. Okay. Dollar index is bouncing. I told you this week, be careful on that 200 moving average. Okay. Did we not talk about that all week long? I said, watch this 4-hour 200 moving average. And what did price do? Bounce. I don't think this dollar is going to be breaking lower. I still think this dollar maintains bid. We can come right back to the same range level around 106, let's say 106.50 to 106.75. We could also have a range on the dollar where we have lows here and highs that were tested back to 108. Listened to an interesting podcast last night, just talking about I think right now, like Greece is paying less in debt than France. And Germany is also, on a brink of recession and slowly starting to see like their stability slipping away. Eurozone could be in some trouble in 2025. We could have some sovereign debt issues. We could have some fiscal crises in the entire region. So, I said I'm pretty eager to buy, euro dollar at parity or lower, and we might get there. So I just throwing it out there, like there may be a trend continuation on the euro dollar. If we're being smart, okay. I mean, keep an eye on this. This is a pretty easy way to look at the euro dollar. If we trade on the right hand side of that trend line with some confirmation, the euro dollar can come back. Look at this. Look at this trend, by the way. 4-hour time frame. Once this thing topped out with equal highs, test perfect rejection at the 200 moving average. We could be doing the same thing here, right? So if this thing rolls over, I wouldn't mind a euro short position, stop loss above the 200, and see if we can get back down to the same lows or go lower. If we're breaking on the right side of the trend line, as far as asymmetry goes, I like this potential setup here. If I went to a short position, let's say we get on the right hand side of the trend line, stop loss above that 200 moving average, I would target parity. And if you look at that type of setup, you're talking like maybe 3-1, maybe 4-1. It's a pretty good looking trade, So I just, Pulver alerts wise, I'll be watching. I'm not ready to take the trade just quite yet, but I will look to see if we continue to see some dollar bid and dollar resiliency, that the euro dollar, the eurozone might be in trouble. Also, ECB next week, I think, may be cutting rates. Let me check that really quickly. We have 6 rate decisions the next 2 weeks. Aussie's expected to pause. BOC looking to cut 25 basis points. My dollar CAD long, by the way, dollar CAD long is up to 140, 146. Son of a gun. I missed my add-on trade. I mean, it's fine. I'm still stacked up at 42. I might as well add another one here at 42.50, which I will. So let me add that now. So 42.50. Let me put in a new trade, create new order. Let me go 25.05 in the trade size, 42.50 on the position. Take profit. I'm going to go after 40. I've got 44.50, but I might actually bump that up. Okay, so I'm stacking that one, and I might as well stack one more. So 25.06. I want to trade these all non-FIFO. That's a breakout of 40.300 and a 44.50 take profit. Okay. So I'll update that in the Pulver alerts. I'm going to throw in a 42.50 and a 4300 stack trade. These are buy stops, and all I'm looking to do on dollar CAD is if we get up to this measured move, if we get up to those previous highs from 2016 and 2020, this is target 1, this is target 2. If I'm stacked up, I already have 3 positions in right now. And if I go 3 entries, 4, 5, 6, going to my profit target, that turns into a nice little winner when it's all said and done. Okay, so just throwing it out there. I like this trade. I like this measured move. If BOC cuts by 50 basis points from 3.75 to 3.25, they cut 50 basis points. I think this trade is going. I mean, it already looks really good. It's already postured for longs. If it keeps going, let's go, baby. Let's get to 45. Let's get to 46. Let's crush that trade. And then we have the Swiss National Bank. Oh, look at this. We've got a 25 basis points cut expected by the Swiss National Bank. Carry trade. Let's go, Swiss National Bank. Okay, this could be good for all my Swiss positions. I've been scalping that thing for literally 2 years. I've been, adding positions. I no joke, probably have over 100 positions running between Aussie Swiss, CAD Swiss, Euro Swiss, Dollar Swiss, Pound Swiss, New Zealand Swiss. I've got robots that are scalping them buy only. I personally have a stacked up position in the whole thing. And if they cut another 25 basis points, they could finally, be a nice little surge to the upside. This thing can rip, have some positive swap. Let's see what happens. So cool. What about the ECB? Looking to cut another 25 basis points. Okay. So we're talking Aussie pause, CAD cut, Swiss cut, Euro cut, dollar cut, Bank of Japan, likely not doing anything. Does that change anything on the yen? Probably not. Does that make me want to trade the yen? Absolutely not. But we're going to have some cuts coming. Okay, so things just got a whole lot more interesting. Now, there's still yields, right? Like there's still positive swaps. Be aware of some of those official cash rates by these central banks. So just throwing it out there. With CAD and Swiss cut, do you think the CAD Swiss? To me, the CAD Swiss is still a positive swap. I think that the issue with the CAD Swiss more than anything right now is the oil prices, right? I mean, if we look at let's look at like Aussie Swiss versus CAD Swiss. So CAD Swiss came all the way up to 64. It's down to 62. I mean, with today's price, I mean, I'd like to see this thing stabilize and then come right back and fill that little pocket from today if we had a news reaction. All right. But in the event that this CAD Swiss breaks this low, where do we go? Probably back down to the flash crash low, and that would be my support. And here's what I'll do. In my bigger position, I will just wait. Okay. I might take one trade at the low. And then if we break the trend line, I'll take another trade and I'll probably have some buy stops to stack back up. And I'm going to try to take it to this pocket or this pocket and look to see if I can find some efficiencies. This is still a small price target. Okay. Now, if we go lower than that crash low, I'm looking at this as, and you gotta think in the future here. Let's say we take out this low. Okay. Some of you might be saying, like, Chris, you're an idiot for holding that trade. And I'm going to say, hang on a second. If there's divergence in overbought conditions or historical lows, my chances of getting a reversal pattern are pretty high. And at some point, I might, I might not time it perfectly, but let's say 6,000 happens to be a historical low and a round number, and the market wants to bounce at it. Well, I can turn this into a manageable drawdown into a monster winner. I've done that many, many times. So that is still an attractive trade for me. If the CAD Swiss doesn't cooperate, I'm still going to hold through it. I've got plenty of margin, got plenty of cash. My drawdown is single digits. I'm not that concerned with it. Okay. But I will be watching it. Okay. So let's see what happens. But if we have a CAD cut and a Swiss cut, it doesn't really matter. I mean, I'm still getting paid for the trade. If we come back down to the flash crash low, that is a strong area of potential support. If we go lower, the first thing I'm going to look at is this level to this level. Are we oversold? Are we showing divergence? Then we break a trend line, and then we start to make our way back up, and we're looking for those liquidity runs to the upside. So would it suck to sit in a drawdown, a little bit deeper drawdown? Yes, of course. I'm going to hate it, but it's still manageable, And I can say this: if I come out on the right-hand side of this trade, I'm going to make a lot of money. Okay, it might be a little bit of pain in the near term, but longer term, if I get what I want, and I don't mind buying off historical lows ever. I don't mind selling at historical highs, especially in the currency market where it's not meant to go all-time highs to infinity like the stock market. We have 30-year historical lows. There's some type of I just think there's some type of structure where it's like currencies don't have exchanges that just go to infinity. They don't go to zero. They don't go to infinity. There's like levels that are traded, right? So anyway, we're gonna see how this all plays out. But the CAD has been beat up pretty badly. Aussie Swiss, same thing. Like they're getting beat up pretty badly. So does next week with the Swiss National Bank line up? Yeah, it lines up pretty well. Doesn't mean I like what it's showing me right now. No, but what would I be watching for? How about a test of that August low? Okay, because if we do this lower, 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 and it leaves these big open pockets with a bunch of inefficiencies, I will definitely be taking a trade at that low. Okay, and I will test, and then I'll look for a price pattern. So it's like I'll test the level, then I'll look for a price pattern. If I get a price pattern, then I'm going to add up trades like 3 to 5, and then get back to a pocket, find a level of support that I want to trade to or resistance I want to trade to, and I'll turn it into a profitable trade. So I'm just looking for an opportunity, and we'll see how it plays out. Dollar Swiss also pulling back. How does this change? Well, next week, dollar Swiss could be a good trade. In fact, I'm going to throw in, let me see what this trade size was. So that's a $39.99 position. Let me see. I'll wait on this one. If this one goes up, that's still my profit target at 92. If we have a slightly deeper pullback, then I'll probably add around 86 and back at the lows around 84. I don't know. I just don't know if I'm going to get it. I think what I need to do is just stack this thing higher. I'm going to go 89, 9,000. I'm going to stack these up right now. So let's go 89. I'll change the trade size here. I'm going to go like $1. So let me do a buy. It's going to be a buy stop at 89. And I'll do this for, I'm going to cut the trade size to 2. Actually, this 39.99 is my net position from, okay, there we go. I can see my arrows here. I've got, this one was a small win. I have trade 1, trade 2 stacked up. So I'm in 2 trades right now, around 2,000 units each. So that means if I want to trade non-FIFO, I need to do, I think I did 2,001,999. So I'm going to go 2,001. And that would be an 80. Let me go 8,900. That keeps me out of the way. 9,200 is going to be my take profit. What? Oh my God. Is that a freaking market order? You dumbass. All right. It's fine. I'm not that. It's more, I just totally messed that up. That's supposed to be a buy stop order. Buy stop at 8,900. Now I have to change the trade size. All right. 2002. Take profit at 9,200. Buy. There we go. So that's 89. Now I'm going to go 89, 50, and 9,000. All right. So let me try that again. So create new order. Let's go 89, 50. Trade it for non-FIFO, so 2,003 units. Take profit will be 9,200. 89.50, buy stop, place. And then another one at 9,000. There we go. Okay, so 2,004 units, 9,000. And take profit at 9,200. There we go. Okay, so I talked about this at the Algo conference I was at in Melbourne. People were asking, I talked about FX investing and talked about a robot. Position-wise, like dollar Swiss is one of my better position trades. Dollar CAD's one of my better position trades. Dollar CAD I'm trying to hold out to 4,500, possibly 46. Dollar Swiss, I said 9,200. I'll level in. If we come all the way back down to these lows, I'm going to level in. The nice thing about the trades that I just put here is if this goes lower, these trades are never filled. So what I can do is I can shift these all down to levels I think are a little bit better prices, obviously. And then if I wanted to buy more, probably buying more in this structure low. But if we end up making a run to the upside, great. We stack up these 3 orders. We got a nice profit target at 92, and I build this thing up from $6 a position to another 2, 4. So that'd be basically I'd have a 12. What is that? A 12,000 unit position, which isn't, I mean, it's not a lot, but I'll end up making, stack this up with a break even around 80, let's say 88 and change, going to 92. I take $1.20 times about 400 pips. So I make a few bucks there. Okay. When DXY stays strong, how's that affect? Sarah, sounds like you want to read about the milkshake theory. If it gets really bad with the dollar super strong, read about the milkshake theory. That is why gold, that is why Bitcoin, that is why non-US alternatives are becoming more and more popular. Okay, so just be mindful of that. All right, SPY, what are you doing? I guess we're topped out at 609 today. All right, anyway. That's it. Any other currencies you want to take a look at? I saw some yen pairs earlier. That's my least favorite of all time. So there's my Aussie yen. We're seeing some strength out of the Japanese yen. I didn't actually look at the currency strength today. Get rid of that. Get rid of that. Get rid of that. Let's go currency strength. Swiss and yen stronger. Commodities is getting smoked today. So, this is definitely a commodity play because China is up and New Zealand, Aussie is down. We've got CAD down, Aussie down, New Zealand down. By far the weakest currency pairs of the day. CAD news wasn't super gangbusters, but we have risk off trading currency wise at the top. Yen, Swiss, dollar, top, and your risk on commodities, especially, weak. And yet we somehow made an all-time high. So weird stuff, man. Weird guy, Ace. Weird guy. Let's see here. Euro Aussie. Yeah, I mean, they're not the currency pairs that I want to chase. Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand. They're probably ripping higher. I mean, but to where? I mean, if we're going higher, it's like we've got levels here, levels here, levels here, levels here. I mean, if you're looking at a smaller time frame, we do have really strong support around that 6,000 handle. I mean, to me, the trade is done. Like I've missed the chance to buy this thing at a support level. There may be some ability to grind a little bit higher if you want to put in some trend trades and then put in like tighter stop losses. But the bigger picture move, the open space is done. Like this would have been, you got to buy this thing at the lows and trade it back up to these range highs. I've already missed the trade, so I've got no actionable trade on Euro Aussie right now. Euro CAD, I'm staying out of this one. I'm glad I didn't force a trade here. I was considering a sell trade on Euro CAD, but I think sitting at those floors and looking at the currency strength, it's like I just don't see the CAD. Plus, with cuts coming, I don't see this one necessarily turning, so I'm going to stay out of it. And also coming into next week's rate decision, which is BOC and ECB, they're right in the middle. So this could easily go up or down next week. I'm not going to pick a direction. But if it comes all the way up here, does it actually hit resistance and then sell back off? Maybe there's a range trade there. But I got to wait and see on that one. I don't like that. Pound CAD, same thing. Really big rejection off the daily 200 moving average. Coming into next week's trading, do we hit this high? Do we hit the high and then reject? Maybe. That's about the only thing I can see that I'd like to trade. So anyway, I'm not going to do anything on those. Let's go Euro New Zealand. Also going higher. To me, this is also a big range trade. So support was down here. Resistance, still has some room to run. They're actually, if there is some space to trade to the upside on a shorter time frame bullish trend, there's more room to run into these resistance levels at like 83 and 8,400. So there's a little bit more upside potential on Euro New Zealand to trend a bit more. But again, trend system, buying low, tight stop losses, trying to get some asymmetry to your profit side, let it run a little bit higher than your stop, right? So I like Euro New Zealand better than Euro Aussie. I can say that. Okay, I saw you, Sarah. I see you typing in all these chats. I was just looking at Pound CAD because I looked at Euro CAD. Pound Aussie, running really, really hot. I just wouldn't be surprised if this thing finds resistance. We are having some higher highs and higher lows. Where could this thing rip up to? Possibly into these, this equal high where we had that August little crash. And is it hitting here, then come back? It's already ran. It's so much. It's ran so much. Ran so much. It's run enough that I'm not chasing this thing. Like currencies, especially, I never chase currencies. If I like a direction, I will stack it up. Otherwise, I wait. I set lots of chart alarms. I let price come to levels that I want to trade at. Okay. All right. Let's see. Pound New Zealand, same type of thing. Is there potential resistance here? I mean, I could see it, but I'm not going to call this top. This has been in an uptrend, possibly in an uptrend here. Does it run out of some steam? Maybe. But if we don't see a big turn and shift in commodity pairs, this is not the currency pair that if we get in a trend, this is not the currency pair you want to be here and call the top. I mean, this thing can trend 1,000 pips. So again, maybe watching some resistance ahead, but not forcing a top trade. So I'm just going to stay out right now. Look, the only way I like the Aussie and New Zealand dollar right now are leveling in very small against the Aussie dollar, New Zealand dollar. Aussie dollar, it's coming back down. It's at 63.86. We are tapping some lows again. I've got pending orders at 63, 62, and 6,000. I'm still waiting. Like this area, and then 6,000 is, kind of my bargain shopping. But if we hold this level, You know, I'm looking to kind of scoop up some Aussie dollar long. New Zealand dollar, same thing. This one I'm already in because it came back to a multi-year low, and I'm watching to see how I can scale into it back down to that COVID low. COVID low right there and 2022 low right there. So rather than chasing or you know, trying to do something stupid on a high volatility pair like the pound New Zealand or the pound Aussie or New Zealand Euro Aussie, to me these just seem like cleaner trades. So I'll wait, and I'm going to scale into these. Let's see, I'm in 2501. I'm going to go 57. I'm just going to put this trade down here, 5605. This is a buy limit, 56. Let's go 05. 25.50. The take profit's going to be back at 60.50. Okay. So a couple orders there on New Zealand dollar. Aussie dollar still pending. Where is my expiration here? All right, anyway, keep an eye on that. Okay. Drew, what's up, Drew? How are you, man? Hashtag Algo Conference. Nice to see you. What time is it, your time? It's got to be normal hours, right? Is it like 4 in the morning? 3, 4 in the morning your time? You're not in Melbourne. You're over the mountains, right? Anyway, thanks for coming in. All right. Anything else? I saw pound yen. Here's my easy analysis on pound yen. Trade short term. 1 hour alignment. Follow a flow. Line up a 1 hour, 30-minute, 15-minute. If you like a trade, take a trade. Otherwise, stay the heck out of it. I can see the pound yen with this high and this low, just doing a bunch of this. Just a bunch of this. And eventually, this high might mean something. This low might mean something. But I would just be prepared for a lot of garbage. So does that give traders opportunity? Sure. If you're a short-term trader and you get those nimble turns. Otherwise, my least favorite currency pair is the Japanese yen. So I'm not trying to force it. 3:15 a.m., man. Well, I appreciate you waking up and being here with us. Okay. All right, everybody. That being said, the rest of my day is just taking a look at some of my 0 DTEs and looking to manage them for today. Still watching the SPY to see, do we get to 610 today? Do we get to 605? Qs, what do they do today? Qs at 525. It's doubtful we're coming back down to 520. AMD, watching this one. We're trading at 141. That might be a small loss. Son of a B. All right. We'll see. They're manageable. It's fine. Had some good winners this week. BAC, CLSK. Walmart was a really good winner this week. Let's see if Walmart's pulling back. Not really. All-time highs again on Walmart. Palantir. Holy fudge, man. This stock is crazy. Like, I can't look at this stock and think, like, I'm going to buy it. So I'm not, but it's like, fudge, just freaking pull back. This is crazy. So anyway, it is what it is, but I just, I know if I'm patient, these don't end well. So going up this way, eventually we do make some type of corrective move. I'll just wait. I'll wait to see if it comes back to this level. Maybe it does, maybe it doesn't, but just not chasing. Okay. GBTC. You still trade GBTC? I mean, that was a good one. The reason I got out of GBTC is because of the price structure. I made the switch. I had GBTC for a long time. As we got this run in 2023, that was a nice run on GBTC. But once we started to see the rumor mill of all the ETFs being approved, and BlackRock gets in the game, Fidelity gets in the game, their cost structure was so much lower than GBTC. I'm like, yeah, I'm going to get out. So I ended up bailing on GBTC with good gains, but I put that entire position into IBIT. But look, it's Bitcoin, dude. I mean, what do you want to do with it? If it pulls back, you like Bitcoin, buy more. But because of the fee structure, I like IBIT better. Yep. So I mean, it's killing it. That's awesome. But I'm just saying, like, this fee structure is a lot more. It's like 2 to 3 times more expensive than IBIT. So That means something when the same type of correlation. I mean, IBIG trading at $56, $57 versus 78 with a third of the fees. So anyway, food for thought. Okay. All right, everybody. We've gone, I'd say, long enough. And it's Friday. Enjoy the rest of your day. I've got some trades to monitor. Watching the SPY, see if I get to, there's 2 levels I'm watching on the SPY today. Qs I'm watching, AMD I'm watching, and more to come next week. So that's it. Happy trading, lots of profits. Real quick on my end, I know like usually I've got an afternoon session, 3 p.m. to 4 p.m. On my YouTube channel. That's youtube.com/Chris Pulver. Pulver alerts, everything with EdgeFinder, Stockbox. Get your hands on all the great software with A1 Trading. And if you're interested, I've got a $27 course called Practical Options. If anybody is, seeing me talk through a lot of these charts, I'm always thinking of option trading. It is, to me, the easiest asset to give me the best opportunity for a binary type trade. If I win, it has to be above this level, below this level. If I lose, it can pretty much go to the moon or go to zero, and I have defined risk. So there's a lot of margin for error, which is a great thing to have. Not a lot of assets give you that luxury. You trade Forex, you get stopped out with a spike. You trade futures, you get stopped out with a spike. A lot of liquidity hunts. It drives traders crazy, right? And traders get so frustrated by getting beat up by the markets and tapped by those spikes and tests. Option trading, you eliminate all that crap. You have a trade for a certain window of time. Doesn't matter what price does, but when it's all said and done, does it get above that level you want it to, or does it get below it and it becomes a manageable loss? So you take out all of the complaints that I've heard for the years where traders are just like, they ran my stop loss. It's not running stop losses, but it's just liquidity hunts. You're going to see markets test highs and test lows because it's going to make liquidity sweeps. It happens all the time. The hard part is how do you trade that, right? I trade it because I trade smaller and I don't use stop losses. But I've got a lot of traders out there that are Forex traders or futures traders that are using prop accounts, and you have rules. You got to have a stop loss and everything. That makes it really challenging. So I'm just saying, if anybody's interested in learning how to trade options for $27, I've got a pretty good course that I think would get anyone up to speed from from knowing nothing to being pretty lethal in the markets, at least enough to express how you want to trade. So if you're interested, you can check it out. It's on my Discord. It's also a Vimeo page. It's vimeo.com/on-demand I think it's quick options is what I have here. So I'm not trying to make like a shameless plug, but I'm just saying I thought a lot about this when it comes to trading. I know that look, I was in Melbourne. I was working with TradeView. I met Martin Dopke at 8Cap. I know Nick and the team know Martin really well, and all they have a great partnership with 8Cap. So anyway, we had a lot of good talks, and I know the space. Like a lot of traders right now are looking for third-party funding, and they're doing it with prop firms. Okay, well, if prop firms have really tight rules where you got to place a trade, you got to place a stop, and you're trading markets that like to hunt highs and lows, your stop losses are always going to be at risk, always. And if you have to trade a prop firm with a drawdown of no more than 5% and no more than 10%, it's going to be tough to win a lot. So I take a lot of that crap out of the equation and I trade options. So this to me is a very cost-effective way to jump into it. Okay. Now I'll say this: if you buy the Pulver alerts and you're a subscriber to A1 Trading, I will give you this course. Actually, I'm giving you my full course, which is $497. I'll give you that. So I know the team already has that access. So if you buy Pulver alerts and upgrade to the VIP stuff, like you get the full course. That one has 11 videos, 13 strategies. This one is 6 strategies. But this is like the down and dirty, quick way to get involved. Cool. All right. In my country, option traders only lose while buying options, right? Which is why I'm an option seller. I'm a premium seller. I trade spreads. If your traders would trade spreads, there's a totally different percentage there. If you just buy options, you're probably going to lose. It's pretty simple. So I trade a lot of spreads. Okay, think outside the box, man. All right, I'm going to let you go. Thanks, Lee. I appreciate that. Okay, everybody, have a great Friday. Have a great weekend. We'll see you soon. Bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, 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 ho.